Hey guys, welcome back. Good morning. January 10th, 9:22. Market opens about 10 minutes here. Just get stuff set up. Market came down, but looks like it's bouncing into the open. So Powell is speaking this morning in Sweden. And here's a little yes. All right, get things set up here. Excellent connection. Games begin. Tweeting it out. Right, and Discording. I'll jump in the voice channel in Discord also. Okay. Everything's good, maybe? Yeah. I think we're all good. So, Powell is this morning in Sweden. I think, yeah. Oh, he's actually speaking right now, maybe. So maybe this bounce was from that? No, that was at 8:30. He's not speaking yet. Someone else is speaking. I'm watching it. Some girl speaking right now. Yeah, nat gas came down. We'll see if it bounces off of this. I still have a long from yesterday, unfortunately. Yeah. But yesterday wasn't too bad. Did all right on ES futures. And today, we get some lines drawn up in here, see what's going on. With the range yesterday made, I'm not too sure on today if it's just kind of a choppy range bound. I'm not thinking as much that it's just going to keep ripping like we had on Friday and the first half of yesterday, because it looks like that was kind of a could have been a top, at least a temporary top yesterday. NG just broke that support. I don't know if I want to cut losses on this thing yet. Basically gave up all yesterday's gains so far, but haven't realized it. Holding overnight. I should have held the shorts buy overnight. But I don't know if I would have closed it here. I probably should have gotten stopped out anyways, I guess. So last support on here. Give it to like 1140. You want some Gimi hopium? Well, it is up a little bit pre-market, so I think it's probably consolidating before a new low, but it's undecided yet. That could flip depending on volume and price action. This could have been the low here at 1540, but so far I'm not thinking that is. I think we're just getting a little bounce and consolidation before either going up from there or going down. But yeah, we'll just see if the volume comes in really. Possible we're in somewhere here or something like here, but the only difference is why I don't think it's actually this is because that volume. All the bottoms have increased volume. This one kind of came in slow, but look how big these daily candles were to the downside before we had it. So that's also what we haven't seen on GME yet. Like big down with increasing volume. But this one looks like it'd be the closest maybe. It could be something like we're in this area where we have kind of a bounce, but then a retest or even a new low and then a rip. If we're still repeating what we have been. BBBY had their earnings, and I mean, I missed some expectations, but it's still rallying, still holding up really well. We'll see what happens when the market opens, but yeah, I think it might not be moving based on earnings at all. Oh, here's Powell.
The perceived risks associated with climate change is appropriate, wise, and consistent with our existing mandates. Addressing climate change seems likely to require policies.
45 seconds.
So I'm playing this on a stock market live stream. Maybe let me see if I can find more.
Decisions about policies to direct.
Yeah, I don't think he's probably not going to be talking specifically about our market, but it's possible. There we go.
Regarding climate-related financial risks. These responsibilities are tightly linked to our responsibilities for bank supervision. The public reasonably expects supervisors to require that banks understand and can appropriately manage their material risks, including the financial risks of climate change. But without explicit congressional legislation,
money control,
it would be inappropriate for us to use our monetary policy or supervisory tools,
market just opened,
for example, to promote a greener economy or to achieve other climate-based goals. We are not, and we will not be, a climate policy maker. Thank you.
I don't know what that was in context to.
Excellent. Thank you all four for these lucid remarks. Now you'll have a chance to agree or disagree with anything the other panelists just said, or
agree or disagree.
You can also get into
I might go long right here.
One of our main questions that you didn't cover in your initial remarks, especially if you have views on desirable reforms of central bank independence and mandates. Mervyn?
Well, I just want to say how strongly I agree with what Jay Powell just said about mandates. Independence from politicians is a great responsibility, and it cannot be misused by trying to creep
one of the
into
pre-market
areas
lows
which has not
like
been explicitly delegated
one of the highs
by the appropriate political process. And the way I think about it is this, that nobody would ever create a central bank to prevent pandemics. Nobody would ever create a central bank to combat climate change. They would create a central bank to try to ensure price stability, and they would create a central bank in order to try to maintain stability of the financial system. So I think if you're going to have central bank independence, you should always remember the maxim, which I think is crucial for any agency, which is only do
Mark's for 1
what
minute.
only you can do. And there are plenty of other people who can take measures to combat climate change. And I worry that people, in the great enthusiasm for doing good, are actually putting at risk central bank independence.
Others? Ken?
Let's see here.
Well, not necessarily to the three questions, but just expanding slightly.
Yeah, please.
I think, particularly when interest rates were hovering around zero, one of the challenges to central bank independence was the idea we don't need it for stabilization
We'll probably come up to this resistance up here at
That's
least.
very popular among a significant group of academics. In fact, if you look at a poll of the American Economic Association and compare what they said in 2000, where that was not considered to be a good idea by most, the considerable majority did think it was a good idea by 2021. And no one introduced Torsten, but he's made giant contributions in political economy along with his co-author Guido Tabellini, also Lars Svensson, who's here, and the late Alberto Alesina. And this just seems to have been forgotten. That I will see, I'll pick on him, Paul Krugman, draw an IS and LLM curve.
Might do some BBY
well, you could shift
calls,
the IS
calls.
curve, that's fiscal policy, or you could shift the LM curve. You can kind of do one or the other. Well, I mean, fiscal policy is actually the sum of tens of thousands of different policies which are hardwired politically. And the fiscal policy is absolutely necessary in many cases. And of course, when a catastrophe, a pandemic, a financial crisis hits, it's less political. But in most cases, the independence of the central bank gives it this ability to approach things more technocratically and fairly quickly, that where fiscal policy needs time to sort out the political dimensions of things.
Well, I mean, one reflection that I have when I listen to the panel here and also looking at the questions how central bank independence has evolved over time, I think it's certainly important that we also see it as a generational issue. So to what extent does the young generation, I think that was very interesting what you said, like in the 90s there was still the memory of higher inflation, and I also alluded to the discussion of the situation in Germany in the 50s, where actually the politicians seemed to be tempted, when you read the account of the historians, to have a little bit less independent central banks, but the public was still so much aware of the high inflation that they pushed for that the public opinion pushed towards more and more independence together with the US authorities at the time. And I wonder whether today we're reaching the younger population and explain to them why central bank independence is so important. And I think that's also part of our outreach that we have to do.
Jay?
So I'll admit to not really answering the third question. But I'll take a shot at it now if I can. The question being, did either the global financial crisis or the pandemic and the responses to them, does it suggest that there are problems with the mandate, unforeseen tensions between
it's breaking that resistance,
either financial stability and monetary policy and that sort of thing? And I guess I would take the position that would not be my takeaway at all.
Maybe this was a good long to take.
I think what happened in both crises is that central bankers used their tools pretty innovatively to deal with exceptionally unforeseen and difficult circumstances. I think the main takeaway from the global financial crisis was the need to build a far more resilient core of the financial system. And we did that. The banks did that. We did that. All over the world, people did that. And I think that financial system now is now substantially more resilient and more strong at its core. I think it held up better in the pandemic as a result. The pandemic was a different thing. It was it called for a whole of government response from a medical standpoint, and it called for use of fiscal policy and monetary policy tools in unprecedented ways. There had been a concern in the United States that Dodd-Frank had too limited the Fed's authority under Section 13.3 to do facilities and lending. The new system actually worked quite well. What it did was it required the Treasury's, the elected part of the government's approval for these emergency lending facilities, and that actually worked very well. And that's actually an appropriate thing, because these are extraordinary measures. We only have the authority during emergencies, and to have the elected government approving it It was a very constructive process between us and Treasury. So I guess to take a step back, I think that the tools that we have work. I think there's nothing wrong with our mandates. I don't see anything about the laws that govern us or provide our mandates that needs to be changed, and it seems to have worked pretty well in these two very difficult circumstances.
Yeah, that's interesting. Yet there is somehow, at least to some of us, a difference in the reaction in the 90s and the reactions now. So in the 90s, the public enemy number one had been inflation, as Mervyn and Ken had discussed, and that was an outcome of decision making that wasn't useful and was subject to these credibility problems. And what we tried to do then was to construct a more robust framework in terms of institutional reform that would produce better decisions that would keep inflation low. Now the public enemy number one, arguably over the next 25, 30 years, were these repeated financial crises or risks of financial crisis. And it's true that there was, of course, much more regulation of the financial sector, but not to the same extent, trying to address by institutional measures the underlying decisions in this arena. By banks, yes, but not necessarily by policymakers. So is there a case, Mervyn, you have strong thoughts on who should be responsible for financial stability and macroprudential policies? Do the events that we went through during that dramatic era of the great financial crisis made you rethink those issues?
Well, I think the answer is yes, because when the Bank of England was made independent in 1997, actually both the then governor, Eddie George, and myself were quite content, despite some press speculation to the contrary, that bank regulation would go to a separate body. But the reason was that at that point, supervision of banks was really all about depositor protection. It was about elimination of insider trading, fraud, etc. It wasn't about a historical bank run and about inadequate prudential regulation. And in the 5 years before the financial crisis, that's when you saw the leverage of the banking system increase very rapidly, so that it did become very fragile. And I think after that, I was very struck that when the to-be Prime Minister David Cameron and George Osborne, the Chancellor, came to see me, their argument for putting regulation back in the Bank of England was essentially that the only institution that people will trust is the central bank. Therefore, you need to take some of this back. Now, you can argue, I think, whether some of the details of regulation needs to be inside or outside the central bank. That's a less important thing. But the principles of ensuring, as Jay said, that the banking system was sound, I think are ones that central banks have to be involved in. But deep down, it seems to me the big difference between the way policy was set in certainly the 80s and early 90s and today is this business of recognizing that the quid pro quo of central bank independence is communication, explanation, and clarity of that communication. The great American economist Bob Solow once said that an economist needs 3 qualities: faith, hope, and clarity. And the greatest of these is clarity.
Excellent.
Torsten, can I just say something in response to your comment? I mean, inflation's back. So yes, if you'd asked that question in 2021, maybe, people said, well, financial crises, but I think you need a framework that, as Jay was saying, is stable over the full cycle of things that are happening and doesn't get, it gets tuned, but, and also look.
The House GOP passes repeal of IRS funding bill for 87,000 new IRS agents. It passes the repeal of it.
Change what it's doing in terms of central bank independence.
All right. So maybe we'll go to the section when the public is involved, the Q&A session. So if you want to say something, please raise your hand. If you want to pose a question, if you do get the mic, please start by saying your name. Please be succinct, and please try to relate to the overall theme of the of the panel. Okay, Richard Portes, please.
Yeah, we're coming through. Richard Portes, London Business School and European Systemic Risk Board, where I have learned over several years a great deal from Stefan English. No more of that now, but maybe later. I'm not totally convinced that we now have a resilient system. Mark Carney said that in 2017 as his final statement from the Financial Stability Board. But then the banks, yes, but we found in early 2020 that that wasn't true of the non-banks, in particular the money market funds, and the central banks had to step in. Central banks don't like to do that, quite rightly. They don't like to have to act as market makers of last resort. And that may be a compromise of the mandate. So the questions that I would put to the panel, as we've seen, we've seen very recently, the rise in nominal rates is exposing financial fragilities in the system. They came from the search for yield, whatever you want to call it. And we saw an extreme example of that in the United Kingdom in September of this past year. Now, in those circumstances, should financial stability be explicitly in the mandate? Should we be recognizing reality, what central banks actually do in practice? Would that help avoid financial dominance if it were in the mandate? Given the huge costs of financial crises, is financial dominance in a sense inevitable? Recognize reality and put financial stability in the mandate. Why not?
Who wants to take a stab on that?
I mean, in a sense, it is in the mandate, most central banks now. And I think it needs to be linked explicitly to the instruments of central banks. This was the problem before. And the obvious instrument is, whether you call it lender of last resort to banks or the equivalent to the non-bank sector. And I think that the central banking community is very focused on the question of defining the circumstances and the nature of institutions that happen to be non-banks that would merit an intervention. And I think that the only way to handle this is to have a framework which is set out ex ante, which actually tries to identify clearly the circumstances and the institutions that would merit lending from the central bank, but also ensures that the scale of that intervention is also under the control of the central bank and not something which the actors themselves in the financial system can expand to almost any number simply by the actions that they take. It's ensuring that there is enough collateral against which to lend by the central bank. Now, I think the central banking community is well aware of these problems. It doesn't make them easy. It doesn't mean that you can do it in a week. Sure. But my guess is, yes, you're right, Richard, that there will be an expansion of the mandate and that it's there in principle.
It's holding up, though, BBY. Seems pretty good. Is rejecting there. I wonder if going along on this support. We'll see. Find the range.
And to have sufficient regulation.
I'm trying to figure out on my TD account, it won't let me do covered calls. It has been in a margin call, but it doesn't make any sense because I've got cash balance on there. Because it's under 25K now. But I shouldn't be in a margin call. But I think that's why I can't sell covered calls in there right now. I'm trying to figure it out. I'm approved for covered calls with my level of margin.
The supervisory authority and with the Ministry of Finance, because as we all know, there's a lot of distributional implications that macroprudential policy decisions can have. So it's not us alone. And I think also the ECB has clarified in its strategy review how monetary policy and financial stability interact. The one point that I would like to make in addition is that we also do have frameworks for evaluation of policies and whether we've done enough. So the FSB, the Financial Stability Board, started this big project in 2017 and looked at the reforms that have been implemented, found no major side effects, found that a lot has been achieved, but there are still also gaps when it comes to resolution reform. So I think also for the areas that you mentioned, the non-bank financial intermediation space, we clearly have to implement policies and look at the resilience in that part. So I fully agree. We can never say that the job is done and we can all lay back. That's what we're there for.
Jay, please.
Just to add, in the same spirit, I think that what the pandemic revealed was weaknesses in the non-bank financial sector, much as the global financial crisis revealed those weaknesses in the big banks and the large utilities, financial market utilities. And so there has been, as Claudio was saying, and Mervyn was saying, there's a lot of effort going into and has been in what do you do about money market funds? What do you do about the treasury market? These things are much.
Not sure I think have anything to say that's going to move the market.
Changes to the structure of these.
We keep listening, I guess.
Make them stronger, more resilient on their own. I would say expanding the provision of central bank liquidity is not the desired response. It really is to strengthen these institutions. Our capital markets are quite vibrant and very different in what they do from what the banks do. And I wouldn't want to see the kind of prudential regulation that goes along with liquidity provision. I don't think it wouldn't be great to extend that too much into the non-bank financial sector. I'd rather work on structural reforms, which is kind of what we've been doing.
Kitty's up 10%.
Thank you. Torsten, you mentioned that you did graduate studies together with Stefan. I can add that I actually made undergraduate studies together with Stefan, so I'm even older. But a question of independence. It seems that you have mainly been discussing central bank independence from, let's call it political pressure, and of course partisan pressure.
Hi.
But there's something more subtle about the independence issue, which I think we can discuss in Sweden right now. I'm personally interested in that. I worked in the finance ministry many years ago, but I was also on the general board of the Riksbank, Riksbanksfullmäktige, not the board of directors, but the general board before, in the old evil days before independence. Anyway, in Sweden we have 4 institutions: the Riksbank, the Financial Supervisory Authority, the Debt Office, and of course the Minister of Finance. And they often work with similar issues, obviously. And they often have to cooperate. So the question here is, how independent can the central bank be in reality? To what extent must the central bank discuss, compromise, lean against the wind or with the wind, and be politically agile at the same time as it is formally independent? Maybe it sounds like a stupid question, but I think actually this is almost as important as the, let's call it the big issue of political independence. I'd like to hear sort of your experiences from this. How independent can the central bank really be?
Can I start by saying, I think we have to distinguish between monetary policy independence, where the case, I think, is very strong, from all the other activities of the central bank. So as a regulator, the United States, Fed's very powerful, but there are many other regulators it deals with. And I think the same's true in most countries. So that it's very different conceptually, and I think all regulators, we'd like to be independent from over political influence and being bought off, or, even if it's only psychically held hostage by those that it regulates. But I think that's, the central bank in general, and looking at all its functions, it clearly has to coordinate with other agencies. It clearly has to be subordinate to political policy, as we had in the first session here.
So I can speak from my experience, which was that between 1997, when the Bank of England was made independent, and 2013, when I left, there wasn't a single episode where the elected politicians put pressure on the bank to adopt one interest rate policy or change rather than any other. Whereas, as Jay talked about, the
I can't even
facilities that were put in place in the US under the new regime, which was meant in some sense to give more control to elected politicians. We in the Bank of England in 2010 really introduced a compact between the Treasury and the Chancellor on the one hand and the Bank of England on the other, which said that any lender of last resort operation had to be approved by the Treasury. That seems to me perfectly reasonable and appropriate. And you have a private conversation where you explain why you want to do it. And in very few cases could I imagine that the Treasury would say, if the central bank feels that a lender of last resort operation is appropriate to prevent some collapse, the idea that the Treasury is going to say you can't do it, I think is not likely to be true. But since taxpayers' money is at risk, it's perfectly reasonable for the Treasury to have an input on it. There was never any conflict between these two different approaches.
Volume picked up on
the different areas of policy. So I think the important thing is for it to be quite clear what that policy responsibility is, whether it's in the US with changes in legislation or the compact agreed between the bank and the Treasury in the UK. It's quite clear what the lines of responsibility are and who has to be consulted.
Oh, that too.
That's what prevents, I think, things going very wrong. It's where different institutions or players
next level up, I'd say,
all feel that they are the people responsible for a particular policy that you get difficulties.
Yeah, or to express it differently and perhaps more simply,
bounce back up to this, back up to the median here where we were before.
Decision in deliberation with
all that
others,
scary news
or
came
taking
out.
it after deliberation with others.
Yeah.
And that's the responsibility point, right? So, yes.
Spies making some pretty big candles this morning.
Thank you very much for the panel. Joachim Nagel for the Bundesbank. Let me put it like this. I think it was already said by Ken Rogoff. I think inflation is back now. We are more or less, in my interpretation, still in the midst of a storm, and the storm is not over. So we have to do our job, our main mandate. This is our role. During the last 10, 12 years, we were the most welcome partners of the politicians because we, in our independent role, we did everything to fight against all the financial crisis and did what we did. But this came with a price. And now in the next years, the politicians have to learn that monetary policy is coming with a price. So maybe some of us, they have to announce that there are maybe losses or not the profits we came up in the past. What is your opinion about that? Is that influencing the way we are
7.5 million volume on the 5-minute candle.
Our independency?
Who wants to take that on?
Well, I'll take it on. It's related to something that I said, which is that the pressures from politicians will be greater and more complex today than they were in the 1990s. And you're absolutely right. But I don't think it's an issue about the mandate of the central bank. That is unchanged. It's that some people in positions of political responsibility will learn that life can be difficult. But I don't really see that there is a great wish anywhere to change the formal independence of central banks. But politicians will always want other people to do things that would benefit their own short-run interests. That's where central banks will remain solid and maintain their independence in respect of monetary policy. And they have every incentive to do so, in my view.
Someone else? No?
Well, I'll add briefly. I mean, clearly, there are many cases where, given the central bank's independence, politicians will look to the central bank, as Mervyn saying, to do something they should do, but they don't want to do, or political interests will want something to do with inequality or something to do with the environment that they're not getting through the political system, and they'll view the central bank perhaps as an end around.
Party City's moving also.
Being able to implement it.
What the heck? Are these in the same basket?
Can't take political
the same bankrupt retail basket
and maintain its independence. They're
you make it in some of this
crises where the central bank
no,
just
I think that's just moving SPY maybe.
But I think in that case, it again is looking to the political system to back it up. If you go to developing economies, the normal rhythm of things is the central bank moves, but then
look, this account has a margin call on it. Does that make any sense?
Treasury kind of takes over.
Option buying power 12 grand, stock buying power 40 grand.
Knows that that's coming.
Day trading buying power 0.
So,
yeah, I'm under 25, so I can't day trade.
The central bank can move so quickly.
But a margin call, and I can't even sell covered calls on this.
Needs to be very wary of taking political decisions.
Stefan.
Outside the topic of the panel, but since Ken, you are on the panel, I'll ask you anyway. You wrote a nice little book called The Curse of Cash, and in this environment, cash is disappearing. So, what's your advice?
Look, there it is.
Well, isn't it wonderful that the people who organized
Sell 10,
this event had
10
a
days,
just
2.5 strike
about this? But no, I think
you have 0 day
one
trades.
of the
Okay,
things that's been very naive about
send.
I will call them crypto evangelists.
It's because of an EM restriction on this account.
Do something
I don't have any
better,
equity to
have
open.
an end around.
Like, dude,
and in fact, if you look at the history of money, which is probably what I should have called my book, and you look at
I can only close
private
positions
sector
on my
always
account.
Invents everything, but for many reasons, the governments eventually regulate it, and even sometimes
they don't want me to win.
And I think that's what we're seeing going forward. And the
SPY break
digital
says I
space,
maybe
you need
should go
rules
long
of the
here.
road. And I was going to bring it up earlier, but I have to mention FTX. That was kind of a success for the regulatory community. It didn't do anything. It's the $32 billion at the heart of the crypto system. Just had
We haven't seen the ramifications of it yet.
I think that it shows how you need some regulatory structure.
Could be months, could be
provide guardrails and
years.
The central banks need to do that. But anyway, I've
Not
learned
success
from you
yet. It's
over the
little
years
early,
on this
little
issue,
premature.
so thank you for asking that question.
I think.
Since we're spiraling out of control here with questions about anything, we should try to wrap up. So all good things must come to an end, and I'm not going to try to summarize what has been said, but I'd like to end with some final remarks.
Looks like BBY
but really just 1 minute
just
for
at
each of you
that
to
pre-market high from the other day
for the audience, which is the most important thing that we should take away from the panel. If you had to expound on one, which would that be? Who wants to take that first? Jay?
So I'll just conclude by saying that for us, central bank independence is a matter of statute. It's not in our Constitution. It's just an institutional arrangement that has served the public well, nothing more, nothing less. And as long as it does serve the public well over time, then I think it's safe, and I think it's safe now. But that means we've got to be committed to achieving our goals and to sticking to this precious grant of independence. To keep it, we need to deserve it, and that means stick to that work and don't look for broader things. Where it was discussed at the first panel, really, we shouldn't be getting ahead of where the public is if there's no specific mandate.
Yeah, I think it's just my type of account, maybe. I don't know.
That's a particularly salient.
Because it was just a normal margin account over 25K.
Yeah, no,
and now that's below it.
I fully agree with what Jay just said.
I sold off my huge position in GME, so I have cash to buy. But
to the mandate and deliver, I mean, this is what's building
like
trust. And I
on
think
margin
when it
with
comes to
everything, which
financial
I never
stability,
bought a
we're
margin with that account.
at a critical juncture because the system has not been fully tested.
That's what I don't
so
understand how I even have a margin call.
Deliver on both of our mandates, price and financial stability.
Erwin?
All good things do not have to come to an end, and central bank independence is one of them.
Trying to have so many barriers for individuals to
comes out
invest and make money in the market.
You can have a debate about whether interest rates
That's really
go
what it
up
feels
and
like.
by how much or go down.
Starting with how
That's
cumbersome
to do
the
with
programs and
the
apps
actual
and
decision that's
everything
being
was
and is.
in a moment.
Robinhood really
But
changed that, made it
institutional
simple and easy, but
arrangements matter. They
and
really
down to just the
matter.
margin and how
that's
that all
why
works. It's like
central bank independence, I suspect, will live longer than many good ideas.
And then all the terminology, I feel like that's
also believe central bank
obvious
independence will go on for many decades to
obvious
come. It's hard to know forever.
Barrier that they put.
I would just again
can't understand what people are saying. You have to be in it for a
really
long time to know
maybe the most
what all the little
successful
things
policy
mean.
innovation
So annoying.
post World War II, and continues to be.
Okay, let's stop at that and take early coffee. Thank you, with a big applause to the panel.
Thank you.
Okay. Great.
All right. I don't know. He didn't really speak much. Unless we missed a lot where he spoke. Not sure. I should maybe get out of my nat gas. I was trying to hold it, wait, but one last level on natural gas. Needs to hold 3.5. 3.5 on the futures. Like it wants to go there. Dang it. KBY is holding up well. Broke that resistance. See if we can break this one. That puts it right back to where it was before. They said they might go bankrupt or whatever they said. I emailed them. It's annoying they don't. I thought they had a chat, but couldn't find a chat for TD. I've gotten a chat before though. That's weird. I think I went through the TED chat and then it eventually got me real chat. Why is Party City up though? They have news. They also liked BBY's bad earnings. Near bankrupt Party City braces for short squeeze. So strange. Nat gas broke that support. Still has little ways to go to get to that 3.5. I'm just hoping it holds that. I saw that candle close yesterday and I'm like, it sucks because it doesn't really matter on UNG, I guess, but just to me, visually and mentally, this has broken the support. But on the futures, it's showing you know, it's still showing this support down here. Oh, it's actually a little lower than that, I think, on the futures. More volume. Yeah, more volume this morning than yesterday. Yesterday, that first 5 minutes was crazy, but tapered. Today, we've got this pump of volume. Yeah, so this hour we'll have more. We've got still 20 minutes left. Fox D's up 5%. Up looked like it was kind of settling down a little bit. Settling up. PPPY has party. I don't know. That's crazy. I don't know anything about parties, numbers, or prospects. I do see party going bankrupt. Bed Bath & Beyond, I mean, I suppose, but it does seem like they would do something with their valuable assets before they would just file Chapter 11. That gas is flushing. I guess I can just wait till BBBY makes my portfolio back over 25K. Then I can sell covered calls on it. I will need... I think I'll need it. Let's see. I think I'll need it up to like $4. Okay. Nat gas. Hold this support you're gonna hit, por favor. Or if this is just like some shorts closing on BBBY last couple days. Guys in Discord. Fired up on this BB run. Like wants to break that. Nice bull flag up here. Get a little poppy. Poppy. Hey, poppy. I mean, the options chain is crazy on BBBY if it does start to go. Oh, spy's breaking out. All right, I'm gonna go along. Patience, patience, patience. Is it fake? Is it real? Let's see. Yeah, I'm gonna go long here. I can't. This UNG position. Not gas went against me too much. Okay. Dang it. Go smaller. Okay, I did 3 micros. GameStop's moving up a bit on that. And I just get some higher striked puts on GME. Let's see. Yeah, I'll just get a couple 13 strike puts. What those cost. Starting to get a little poppy here. Okay. See if it holds support on this breakout right here. The big engulfing candle on the hourly. Another M and Q, or no? I mean, I want to get a big ES. All right, it's at that next resistance, which is support from yesterday. Broke through that. Got a big one. How many did I get of those? 2, I think. 3, not bad. 3 isn't bad. Yeah, this is why I can't hold the big future going against me for too long. Hello? Just freeze. Weird. Hmm. Might go long again here with another micro. I mean, so far, BBY has sustained its run. I mean, we're, last 3 trading days. Yesterday, I mean, it sold off some, but it held up. It's gap up, at least. Don't like seeing SPY break that support back down. Yeah, so far it hasn't given back its gains, really. SPY. Hmm. Now it's just looking choppy. BPY sitting on that VWAP. See if it holds. Jimmy just made this move with the market. Oh, it's coming down. Dang. Back to VWAP for SPY. Might be a good long here, though, honestly. Still have a nice engulfing. Nine minutes for that, and that'll be closed. Be good if SPY held this VWAP. But this, otherwise, this is just a little false break. BBY did not hold it. See where it finds support. Like SPY wants to drop below it too. Got this pre-market high. All right, natural gas. Needs to see a bounce here also. No, must mean Arzi is going to fly in to save the day. He deleted his Twitter bio because he's going to put Baby King. Nice, Chippy. Up. Bouncing right back up. Man. I guess Pal had a, before he spoke, he had a written statement before that 9 o'clock thing they did. So that could have been what rallied the market from here, from 8:30 to 9. Because he wasn't talking about inflation, and market liked that he wasn't going to just scare it. So that might have been what this bounce was. And potentially what somewhat of a rally today could be is the unknown of Powell, and basically is off the table because it's over. So we could continue our pricing in of a bullish CPI, which is on Thursday. Not much data tomorrow either. I don't think. Let's see. Wholesale inventory is at 10. We already got that. Yeah, nothing tomorrow. So everything's on Thursday. So BBBY basically just ripped back up to its support before the statements of bankruptcy, or whatever statements that made this move down. But be good. I mean, yeah, we want this to be support again to maintain an upward momentum, and really potentially get a gamma squeeze going again, because option chain is coming back down to VWAP. Option chain is there's a lot of volume, a lot of open interest, all the way up the chain. I mean, this is crazy. Look at all those at the 80 strike. I don't even know what 197,000. Yeah. SPY's flushing through that. Like to see it hold this support. If it doesn't hold this, I'll probably close my my longs on SPY. Or on the micro ES. That's why I don't like to trade so early. Sometimes it just gets volatile and choppy. But sometimes the trend starts right away, like right here yesterday. All right, I'm closing my long for now. I'm gonna chill. And it sucks. The gains I made yesterday are now sitting down in this natural gas contract, which looks like it's maybe finding a floor, but I don't think I want to take a short here. I think I just want to little head and shoulders here on the hourly, even building. MACD did flip bearish on the hourly. Oh yeah, and that hour candle didn't end up being engulfing. And now we're getting engulfing the other way. Looks like this might be the direction, actually, the downside. We thought with the break of this, more move up, and we did get a move up after that break, but we got the move up and the move back down. So could be signifying the top of the rally from this break. Especially since it was intraday. It wasn't like an after hours move. SPY's about to make a new low on the day. Yeah, they announced their earnings this morning. So, wasn't great. I don't know. Expectations, of course, were better than what they announced. So, missed expectations, I think, on most fronts, but it wasn't too far off. But the fact that it's rallying, it rallied before that, before the earnings, and then this is probably the earnings right in here somewhere. And then after today, it's kind of an interesting sign. And it's probably not rallying based on earnings at all, but no way to know. So SPY hit that support down here, see if it bounces. That gas, new lows. This false breakout bugger. With that hourly candle closing down here, this is now looking like a bear flag and little head and shoulders. Might be good to take a short on this bounce. Okay, it's at the lows, which sketchy, but I did take a short there. I don't like that last hourly candle not closing engulfing. And then this one's got a ways to close, just open, but yeah, head and shoulders. And the low, so it could bounce from here. Could be the range. This did actually break that low, so where's that? Now I wait. Natural gas coming down more. Oh, now it's getting to the very bottom of the wicks. I don't like that at all. I trade the range. This is a good spot to probably go long. It's in the range. But this is such a tight range, just choppy. Front run it maybe a little too much. Like it wants to bounce on this level. Yeah, it's bounced on that level. Okay. I'd be trying to trade in the range and not the breakout. Might be setting up a little bear flag here, but also holding support on that support from pre-market. BBY is bouncing back up to VWAP. SPY just broke that level. I had an order to close it, but I actually canceled that order. But I should maybe get out of it just since this is the range. All right, SPY broke through that level. Next one would be that low from pre-market. And see if we find some more levels here. Yeah, I think that's the next one after that. And I am ready to just hold a contract. Keep holding the contracts going the wrong direction. Freaking tiring. So this would confirm yesterday was that reversal. The profit taking was legitimate. CPI price in that theory. Maybe that was it. And now probably just some staying in this range until CPI. So maybe not a big move after hours. Maybe not much reason to hold after hours. Okay, now we just need that gas to rip. Hedge funds in 2022 posted the worst performance since 2018. Except for our beloved Citadel, it seems. Oh, I didn't put a stop limit on it. It would have triggered there. I'll wait. We've got bearish MACD right under the 9 now, and it broke through that support. So I'm a little more willing to hold through some volatility. I think it'll make new lows, at least down to here. And then, yeah, we'll see. And we've got time in this hourly candle. You need a little up move on the SPY though. BBY's liking it. As long as it doesn't drop too much when SPY does, and then it rips on ups, outpacing to the upside. That's good. Same with GME, but it's moved down with the SPY. Look at that level I have drawn. It bounced right on it. Max paying $17 on GME. Borrow fee still high. Doesn't seem to matter right now. Yet. Back here, I mean, we were having rips. So that's another thing that's maybe changed. I mean, like, this borrow fee wasn't that high for very long before we started rallying. We haven't sustained a 20% borrow fee when we did back here, but it was already up. And then we did have a rally. This is the split, and then it rallied after the split. Okay, natural gas maybe at a bottom. Finally back at its support. Average price of a used Tesla. Yeah, I heard Tesla's given $10,000 off on some of their cars. If this false breaks to both sides, down on that short now, but I'll hold it. This is engulfing. This is still kind of a bear flag. Still have a bearish MACD. Is through that support. I wouldn't like to see it come back to VWAP, but maybe it will. BBY is liking it though. Back above VWAP. Jeez, false breaks to both sides. This is why I like to set a stop limit pretty quick. Don't have to make the decision, just let it go. All right, back up to here or VWAP. Maybe back up to here. Might just hold on for the ride. Yeah, because we've got on the hourly, it's more bearish looking to me. Copy date. The consensus estimate for Thursday's inflation report is 6.6% overall US CPI year over year in December, down from 7.1% in November and the 40-year high of 9.1 last June. Yeah, so they're expecting it to come down quite a bit. From 7.1 to 6.6. Earlier at the meeting, Powell said Fed should focus on its goals, stick to our knitting. Powell says Fed won't use its tools to promote greener economy. That's what we heard. Powell does not comment on current U.S. economic or monetary policy outlook in prepared remarks for Sweden's Riksbank symposium on central bank independence. Yeah, that's, I don't know why this is coming out so late, but that was the I think that was maybe the rally in the pre-market. Literally both the levels it broke through and was false. SBF may find it hard to argue fraud charges against him. Should be tossed because of uncertainty as to how U.S. law treats cryptocurrency, as other high-profile defendants in criminal cases involving digital assets have done. I guess sitting at that support. The range trade. Now SPY is breaking VWAP. Wow. Big hourly candle there. If this 11:30 candle closed like that, that's pretty bullish. Oh my. Look at that. Is this what happened? When did this happen? A few days ago, right here. It's sort of a similar V. But this was a breakout day. So we'll see. If it does break out here, it's a big loss I'll be taking. Then to go long, I could. But I don't know if we're going to have a huge move based on Powell this morning and no other data really moving the market. Seems like it'll just be chill till CPI now. Up's about to go green. Natural gas potentially going to start going up. Got EU closed in 30 minutes. HKD stop running. Yeah. Hope you guys got out of that. Bullion's RC sold his Apple stake. I didn't hear that. I was just hanging out at VWAP. They have activities on Discord now. FTC is scrutinizing Coca-Cola, Pepsi pricing practices. Rolls-Royce again with reported record sales last year despite an average price tag of around 530. Last year. Natural gas looks like it's just flattening out again. Consolidating potentially before big flush here. Oh, Like, what level was this? Why did it... The highs from here? Kind of a weird spot. Hmm. Well, spot looks like it wants to keep moving up. Above VWAP. I've got a bullish MACD. Hmm. Yeah. You're eligible to remove the day trader flag from the account. You only do this once for the lifetime of the account. I haven't day traded since I was just chopping around. Nat gas still flat. They got back pretty quick to their email though. TD did. That is a pretty big hourly candle. 20 minutes for that thing to close. I don't like it closing that high up there. Pretty big hammer. Hey, they already had their earnings call. 1669 on GME. Whoa, flush there on BBY. Come on, SPY, come back down. Trying to figure out when to short some puts on GME. I'm at the spot where I want to go long on them, so it wouldn't make sense to short them also. And it's bouncing on VWAP. Oh, I sold too soon on box D. 17%. Chart looked good. I just I wanted the cover calls to work. I couldn't get them filled. Yeah. Could have done a swing on the shares though. Oh well. Up has done well for us. Look at this thing, it's now green today. Wow. What time horizon? I mean, I could take for it to build and fully happen. That could be. It could keep going. Like it doesn't. One gamma squeeze can kind of lead to another one. Just depends on the option chain. I think we've seen that happen. We've seen that happen with Tesla. I think it's a good example. You maybe would look at it as like somewhat of a short squeeze, but the Tesla ones weren't as crazy and volatile, but I think we did see that like over the course of a month or two, or maybe even 3, where it just had huge ups. Of course, with GME and BBY, like we're more accustomed to more volatile rips, but like this, I mean, I guess that wasn't a month, but it could have been building this whole time. So the option chain up in this price was getting bought up this whole time, and then it just ripped. And 15. That was about a month. Happens to the downside too. I mean, that's the thing. I think by one of their splits, they had kind of a squeeze into it. So on BBY, like, unless if there's fundamental news of like completely shaking off bankruptcy, I don't think it would last that long. A squeeze, a gamma squeeze. But yeah, I don't know. Could be a couple weeks. So here we had the island and didn't do anything. Why doesn't my search on Windows search all my hard drives? It never finds stuff in my one hard drive. SPY's moving up off of VWAP. See what happens. See if it hits this resistance up here. Oh, okay. Looks like it wants to come down again. Already is outpacing BBBY today. So if my contract gets back profitable, I'm not sure if it'll break that. I might just close it there. Might just be retesting that range, which is kind of unfortunate. Would have been better just to even open right in the middle and just chase it. If I chased it on this candle, it would have been in a better spot to go short. Yeah.
Activities come off basically since the end of October. We're talking November, up around 240 down to the recent lows around 101. And I just want to point out this chart here, we're talking hourly candles, and you can see as you take a look at the top left corner how we've seen a couple times now, a bit of, well, here you can see some tops that have played out. Let's begin our attention here with the top left corner. First and foremost, you've got this pretty well-defined double top right around that 240 area that I mentioned. You've got, again, another kind of double top that formed here on the way down. We're talking around 200. And then most recently, I guess one could argue that this is a bit of a triple top right here. So you can see a pretty well-defined, again, trend to the downside, and one where the bears are in control. No longer a great name. Scott mentioned how they missed targets. They've, again, given us some bad news, basically, and again, talked about lower price. But also I want to point out that Elon Musk has been selling throughout this. So if that were to kind of subside, potentially, again, we could get what Scott's looking for in terms of a bottom. Now, let's just clear this out and take a look at what's going on in terms of the daily time frame here, because I want to point out how a similar situation, right? We were just looking at this move. We're talking about from 240, here it is, from 240 October, November down. You can see that's just part of the bigger picture move that's been playing out. Direct your attention again to the top left corner up there. You'll see around 415 is where we were trading. And as I look at this, you're going to see another very similar situation. I'm going to kind of extend this out and call it a triple top here. One could argue maybe a double top, but here definitely another area where we failed. We had an area of resistance, and then this is that other top that we just talked about and the others that have played out this fall. So you can see a very similar pattern where, again, it looks like in this instance the bears are in control here, right? Nothing hinting that at this point the bulls are. That's going to come in terms of taking out some of these key areas that were established on the way down. Clear this out, and lastly, let's just take a look at where things stand in terms of the bigger picture. 50-day moving average is well above where we're trading right now. In fact, it's $50 above where we are. The 200-day is about $130 above where we are. You can see how RSI, though, has bottomed out recently. So it was, again, weakening, but it's starting to inch its way up. Possibly Scott's right. We are forming a balance here. We're going to look for a breakout if we are to the upside above 125, 130. But as of right now, still no indication that this one's rejecting these lower levels as of yet.
Yeah, and those triple tops really tell the story, Ben. I'm glad you brought that to us. I mean, it just shows that you have that and there's nothing good that happens afterwards. Scott, you may be onto something with this, and while there are many folks who have higher price targets than where we are now, there's still some those that are making money on the shorts. Final thoughts?
Oh, let's see about that Tesla TA.
I've been leading the Schadenfreude squadron. That is, I've enjoyed seeing Elon shoot himself in the foot. Unfortunately, taking a bunch of Tesla shareholders along with him. But also, while
that engulfing candle,
lower left to upper right, lower highs and lower lows, there are a number of really neck-snapping rallies in there. And those happen when people believe that the company can do no right. And we know that when sentiment gets really, really horrible, and it's really horrible now, is when some of the bulls can step back in and run the stock up. That
could be a good short there.
Yeah. Tell me about United Airlines. This is a name you say buy United Airlines for the long term. Why is that?
That's right. They're bouncing back from COVID, but they're still less than half of the price that they were at in January of 2020 before this
MACD flipped bullish. Green over the 9, but
and so the pricing is really good. They still have wonderful ridership. They're using all of their seats. They're going to have pricing power, particularly going to Asia and overseas. People are going to be trying, I think, other airlines now that they've been burned a little bit, like Southwest. Just 7 times forward PE, and United is working to actually increase capacity. So I think it's the best of the legacy carriers. It's the best of the hub and spoke carriers, and they're going to benefit from all of the unfortunate stuff that we saw at the end of last year when it comes to Southwest. I love the fact that all the seats are full. They're going to have pricing power. Americans are desperate to get out and travel. American business people are desperate to get overseas. And so that's all good for United, which is still, again, less than half the price it was in January of 2020.
Right, at $44.24 today. Ben, what are you thinking when you take a look at this chart?
Well, I think the price activity we've seen is a reflection of Scott's breakdown there, how UAL has been taking off the last week, this week, from 36 to 44. You can see the trend environment to the upside, bottom left corner, the top right corner. And look at the ascent we're seeing as we posted new highs recently up to 44.36. Now take a step back from this, and I just want to show you the perfect example here that this has provided us in terms of the very well-defined two separate phases of price development. And there's only two. That's the beauty of kind of looking at price through this lens. You have the high conviction vertical phase where we get higher highs and higher lows from 36 up to 39.50. And then look, we go sideways, rotational, overlapping, less conviction in that horizontal phase. We break out vertical again. Every time we break out and then go horizontal, we increase another $1 to the stock price. You can see most recently up to the $44 level. And look, pairs we're starting to go vertical again to the upside here right now as we are attempting some higher highs and higher lows.
Market looks like it wants to keep going up. Dang it.
From this very granular 5-minute time frame, but I just wanted to again point out the conviction that we've seen since Tuesday, last week, all the way up again to the new highs.
Consolidating above VWAP. It's got this little bull flag going on.
Daily time frame while we're taking off last
MACD's
week
bullish.
and into this week, you can see that we're in a bit of a holding pattern here in terms of UAL, right? Basically going all the way back to the pandemic lows around 2020. We saw the highs into 2021. And as I look at this, I just kind of notice here that we're at a very pivotal area. I'm looking at, well, first and foremost, that range I just mentioned, 65 to 20 is where we've been in over the last couple years. Look where we are right now in the middle of that range. I always say strength through the middle opens up a door for a retest of the upper extreme. It looks like that's what we're trying to do. But if we roll back over, we could retest this lower extreme. Now, I also wanted to point out, in addition to the range that we're looking at here, kind of the opposite of what we just talked about in terms of that really well-defined trend environment to the upside. Look at what I'm seeing as
UAL?
look at this. You had an area consolidation 2019 into 2020 around the $90 level. Look at this high conviction pandemic trade to the downside. And then it does seem like we're just kind of in this wider area consolidation, as I just pointed out, hovering around the $44, $45 level. So you can see why this is significant right at that pivotal level. But lastly, let's just step back. And again, here you can see above the 200, above the 50. Look at this. If higher today, 5 days in a row, you can see how they're definitely getting lift here. RSI participating to the upside as well. So I can see where Scott's getting enthusiastic about this one.
Yeah, that's really good to show that last move that we're seeing straight up to the upside. And look, we had a Santa Claus rally. You know, our first few days of trading in January have gone well. We're waiting to find out about the January effect, but the momentum has been more to the upside than to the downside, Scott. I mean, and when you look at a name like UAL versus one that has had a tough story of late, like Southwest Airlines, right? And they're out there offering all these discounts now through January 31st.
This is the way.
Did you used to be a fan of Southwest and now you're not?
I was a fan of Southwest as a business and an airline. It was a wonderful business and an airline, and who could blame fans of it? They seem to have just a different take on the whole business. But the bloom is off that rose. I mean, I think much of the goodwill that Southwest has built up over the past 2 decades evaporated in the last half of last week.
See if BBY can hold this support from earlier today.
To operations, it became a much more financially driven company. And when you're trying to get people home for the holidays, that just doesn't work.
Bloom is off the rose. There's the quote right there.
Yeah, I've never heard of that before.
Last but not least, Bank of America will be hearing from a lot of these banks on Friday. Does your trade incorporate here? You said looking for
Our track record at understanding inflation is really, really bad.
You're incorporating
range
the
of
trade
plausible
here
outcomes
with
over
the
the
earnings.
next 2 years is very, very wide.
Absolutely. This is going to be a short-term trade. We're going to buy it for earnings
True.
because, and Bank of America is my pick, because I think that a couple of things are going to happen that are going to be really positive for the big banks. One, net interest margin is almost certain to improve. They're likely to have a little bit of trading revenue improvement from hedging. And additionally, I like Bank of America because of valuation. So it's not nearly as expensive from a price to book standpoint as
the average interest rate on credit cards has hit 19%, the highest since records exist in 1995. I feel like all my credit cards are over 19% interest on them.
So Bank of America is the best mix of valuation and performance. Price to book for Bank of America is right about 1. So it's about double what it is for Citi, true, but it's about 60% less, or about 1/3 rather, less than it is for JP Morgan. So it's in the sweet spot for valuation. I think they're going to do really well from an operational point of view. I think going forward, they're going to give really good guidance. And so I'm just looking for a nice pop from Bank of America when it comes to earnings in an earnings season when people are not expecting very much good.
Yeah, so JPM is pricey, Citi is an operational mess, Bank of America is the name you like. Ben, what do you think here of BAC?
Has been a chop basically since May. We're talking 40 to 30. So what I did is just immediately zoomed out, pulled up the daily time frame first and foremost, and what I noticed was, much like Tesla, a couple double, triple tops playing out. Direct your attention first and foremost to the top left corner there, up around that $50 level, and you can see we've got one here, right? Pretty well defined, up around 50, where we had a hard time, couldn't get anything going to the upside with any real follow through. And then, as you can see, as we kind of work our way down, we see another one play out here around this. Well, taking a look here, very well defined triple top round. We'll call it 38, but I want to kind of ease that a bit, just up to 40, and I'll show you why in just a second, because what I want to do here is actually just, hold on a second, let me just clear this out and show you how, well, as we do this, I want to point to, well, first and foremost, how we've got a pretty well-defined upper extreme here. Again, around this, we'll call it a $40 level. And then we've got a very well-defined lower extreme here that's been established, again, around this $30 level. So we've got a very well-defined range. This goes all the way back to the beginning of April. And just want to point out here that we're kind of right in the middle of it here, right around this, again, $35 area. So as you can see, holding in the middle of the range that we've been in, a pivotal area with some pretty well-defined
SPY's coming down. That's
extremes established. Now,
a little bit.
Let's take a look at this chart, because you've got a very similar pattern, right? As I look at this, kind of in the middle of
right
a
on that support.
wide range. We're going all the way back to the spring of 2020.
Top.
This is March, and we were trading, well, we were down around the $18 level. And then you can see, again, we've got a pretty well-defined upper extreme right here around this $50 level. Where we are right now, we'll call it 34. I'm going to look at it and say, hey, we're basically smack dab in the middle thereof. So you can see, again, a bit of a range that's been forming, and Bank of America's in the middle of it. Lastly, just taking a look at where things stand in terms of the 50-day, the 200. We're holding below. Again, you can see in the middle of this range that we just identified. Look at the RSI. It's not really providing a lean one way or the other. Smack dab in the middle of the range that it's been in basically since, we're talking, August of last year. So, again, pivotal area here right now, but no real lean one way or the other.
Right, understood. Okay, and we see that with the two moving averages. Scott Nation's final thoughts here on the big picture of the market, as we heard a little bit from Jay Powell today, but we'll have a Fed meeting 31st and 1st. Is the Fed on the right direction or not necessarily?
Well, I think that, well, one thing that I do think they've got right is the terminal rate for Fed funds number needs to be above 5%. We've gotten a couple of inflation numbers that were incredibly high, but slightly better than expected, and people really took comfort in that. I'm not certain that's what you ought to be focused on, is the beat as opposed to the headline number. So I think the Fed finally is headed in the right direction, and that's going to help some businesses. To the ones who can pass along inflationary pressures are going to do really well. And we've talked about some of those names. One of those names, I think, is going to be some of the big.
So that hourly candle closed red, pretty high up on the candlestick there, the wicks, the body is. But this is looking more and more like a bear flag now, which is good for a short. Red into the 9 moving average up here, bearish MACD. Here's our pull and our flag potentially setting up. So on that longer time frame, I'm more comfortable in my short. But it's, yeah, I don't think we're going to have a huge move until probably CPI. Here's UNG, what I'm watching on my other screen. Yeah, it's just kind of hit this support. Thankfully, it's held for now. Support from back here, the 6th of January. But on UNG, you can't see this because this level didn't happen while pre-market or after hours were trading on natural gas, UNG ETF or whatever it is. So it looks like on there it's totally broken the support. All right, SPY's breaking that support. Yeah. So here it's 1129 and there's nothing down here. So even extended hours, it's lower. BUI kind of bouncing without the market. That's good. Bounce on that support from earlier today. Market is coming down. Jimmy's moving with it. Options. Oh. Thought I recognized that voice. Next gen investing. Thoughts on AMC? As far as what? A trade? Long-term investment? CA? Like UNG to break this little range it's into the upside, then maybe move back to VWAP.
Rumors here, Oak Street Health, which is jumping 25%. In fact, it's having its biggest one-day move on record. And CVS, is this a done deal? Is this more rumored? What's going on here?
Definitely. So this is actually a Bloomberg report that is saying that CVS is looking to acquire Oak Street Health. And that's why we are seeing a little bit of a pop in the stock today, actually up 28%, as you kind of mentioned here. But when you look at Piper Sandler, they do believe that although this news is very welcoming, they already believe that Oak Street Health actually already had a fundamental story to tell. And it's one of their top picks in 2023 here. They do believe that the company has a scalable business and they're able to provide these services to their customers at a improving unit cost, if you will. So yes, we are seeing this type of acquisition or potential acquisition occur, not only within this name, but there's a lot of acquisitions occurring right now in the healthcare space, Nicole. So I'm not surprised that we are seeing this type of transactions, as well as this adjustment for a lot of these companies that are trying to scale back costs, but also look at ways to grow. And unfortunately, right now, it looks like organic growth is a little bit difficult. So they're trying to synthetically grow by acquiring new businesses. So overall, this is a pretty significant pop. We haven't had it confirmed by the company as of yet from what I've seen. This is just a Bloomberg report, but it is a promising start for a company that has been able to weather the storm here, especially within the last couple of quarters.
Yeah, big news, an important story to follow this week. Kevin Green, thank you, Senior Markets Correspondent for the TD Ameritrade Network. Appreciate it. It's time now for our spotlight on Abercrombie & Fitch. Now, the retailer rocketed higher yesterday. Guidance, good news there. Corey Tarlow's with us, equity analyst over at Jefferies. So it looks like they had some good holiday sales, and they're seeing some good things ahead. Tell me a little bit about your opinion on what you've heard from the company and how you interpret it.
Sure. So I'm here right now coming to you live from warm and sunny Florida in Orlando at the 25th annual ICR conference. And I spent about an hour yesterday with Abercrombie & Fitch management. And if I were to just sum it up simply in one quick phrase for you, it's that the holiday was better than feared. So I think that largely coming into November, December, which is obviously a key time frame for a lot of these retailers, I think people and management teams were a little bit hesitant, or they were cautiously optimistic into the holiday. And what we found out was that, well, the higher income consumers tended to shop pretty well and shop a lot and shop a decent amount, so that it supported the Abercrombie & Fitch segment. Hollister segment still was a little bit better, I think, trend-wise than
Nat
what
gas
they
is
saw
bouncing.
in the third quarter into the holiday period.
Doing it.
But nonetheless, that's a lower income
Might actually grab
and a
another
younger
one.
customer than
Average
Abercrombie
down.
& Fitch. So you don't have as strong results in that segment as you do at Abercrombie & Fitch. Second, on inventory seems like it's in a
Not
really
enough
great
margin.
spot. It's
Never mind.
improving. They're planning to end the year flat versus the prior year. Obviously, inventory has been a really big story coming into 2023, where in 2022, inventories were obviously very elevated. Now it seems like that is under more control. And then lastly, on margins, obviously many retailers have been a little bit more promotional. I don't think that Abercrombie & Fitch is unique in that regard, but it seems like by brand, Abercrombie & Fitch has probably had to promote a little bit less. Hollister maybe a little bit more to clear through some of that excess inventory, but is nonetheless well positioned into 2023.
It's amazing how they did better than expected during a holiday season that I think was really under the microscope, and somehow they managed to do this. You said inventories are improving and cost pressures appear to be coming down, and so maybe more tailwinds instead of headwinds. I mean, we saw better sales than expected, but what's interesting is how the analysts are interpreting what is going to happen going forward. I don't know how much of it is about Abercrombie or how much it is about the consumer. For example, we have Lululemon. One of the articles said Lululemon in the penalty box. So is this a consumer problem, or is this Abercrombie just doing so incredibly well?
Well, I think that it's a matter of measuring and appropriately calibrating expectations, which I think had been relatively subdued.
Why is Abercrombie still around?
You see many retail stocks have been up the last few days on some of these retail pre-announcements that have been, again, mostly
I haven't been to a
better
mall in a long
than
time, though.
expected. And Lululemon, I think, given where it's trading from a valuation standpoint, likely might have some trouble ahead. And obviously, the shares were down yesterday on its pre-announcement. But nonetheless, Abercrombie & Fitch is one where, particularly at the Abercrombie brand, a lot of those headwinds that it faced this past year that you talked about, like freight and markdowns and air transportation and supply chain issues, all of those things are largely going to dissipate as we head into this coming year. So what you now have is headwinds turning to tailwinds, which should support, theoretically, better margins as we look to this year.
So tell me what names in the retail sector you like best, where you have strong buys or buys. I mean, Telsey Group actually has an outperform and a $33 target on Abercrombie, while I also saw another one that had an underweight. I think it was Morgan Stanley that had an underweight on this one. So there's not always generic love for all of these names. Which ones do you think are best positioned for 2023? Which names in retail?
Jimmy and BB
Specifically within specialty retail, Abercrombie & Fitch is one that definitely stands out to me. And the one of the reasons that I say that too is that they've been really nimble in terms of what they've done from a supply chain standpoint. So denim is one category that Abercrombie & Fitch, and as an enterprise, sells a lot of. It's a top 3 category, but it's not as significant as some other retailers, and denim really hasn't actually been doing that well. So one of the things that Abercrombie & Fitch did rather uniquely is rotate into cargo and woven pants that have actually been selling really well so far into holiday and in the new year. So that's one thing that I think is probably going to support
cargo pants are back
trends at Abercrombie & Fitch in the near term. And then the supply chain nimbleness that it's now stood back up should support trends throughout the rest of the year as we look to supporting more profitable sales growth ahead.
Okay, Corey, thank you for all of that on the retail world. Corey Tarlow, equity analyst at Jefferies. Thanks for being here. Coming up next, disruptors, and we'll find out why KeyBank's getting bullish on Bumble. Now, George Silas will take a look at this one and provide an example trade for us next.
Let's walk through how to analyze a company's financials on thinkorswim. To get started, go to the Analyze tab and select Fundamentals.
I got a little food here. Why is so choppy? Doesn't want to sell off. Hope we get back down here though, at least. This is all copyright free, so no. Back up, SPY goes. Back to VWAP. And rejected. UNG made its bounce off the bottom. Hopefully it sustains it up, at least to VWAP. I think my cost basis on here. Oh, it's up here somewhere, I think. Fortunately.
Industrials analyst over at Morningstar. So tell me a little bit about Boeing. It's a great American company. I was seeing all the deliveries that are on the rise, and they're delivering Maxes and P-8s and Dreamliners, and things seem to be improving. You noted the change in management. What's the good news on Boeing, and what are you terribly concerned about?
Thanks for having me on, Nicole. The good news is that I think that Boeing has the worst behind it in terms of the groundings of the 737s, 787s, and as you mentioned, deliveries, including ramping up production, but also delivering the planes that they have on the lot from refurbishing all those planes are on the uptick, and we see them ramping up through 2025. And each of those planes that they can deliver.
The PE ratio on the S&P 500 ended 2022 at 19.2, a multiple contraction of 16% over the year prior. The average year-end PE ratio for the S&P 500 since 1989 is 19.6. That was a tweet from Charlie Valelo. Yeah, 2022 was the worst year the market's had since 2008.
Will ever regain some global leadership the way we've seen in the past. What's the good news to you, Colin, and maybe the headwinds?
Well, I've actually been very encouraged by the resiliency of 737 and 787 market share. So despite all the troubles with those planes and the tragedies and, dropping out of deliveries for over a year for the 787, they're still in very high demand. The airlines want them, and that's really the most important thing for Boeing from a financial perspective, is that the demand is there. One of the biggest headwinds over the past year has been just the supply chain not being able to meet demand for a new aircraft. But we started to see some very positive leading indicators, at least in our opinion, that signal that Boeing and also Airbus, coincidentally, are probably going to exceed expectations on new aircraft deliveries this year. Just looking at what GE's been able to do on engine deliveries.
Yeah, it's copyright free music.
We think they were very conservative in their delivery forecast for this year. And because the demand's actually higher than what they forecast to deliver and the supply chain is improving, we think there's a lot of upside to their forecast.
And you have a strong buy on this, right? Your price target currently is what, Colin?
It's currently 230. And we do have a strong buy rating. We think one of the key things we're going to be looking for on the Q1 call is to reaffirm our view of the supply chain, that it's actually improving much faster than Boeing predicted last fall. And also just, we think over the past 6 months that Boeing has finally re-estimated all these major defense programs under this new inflationary environment. So we're very confident that this period of huge write-offs on the defense side is probably over because they've done the re-estimating they need to on the contracts. So we're looking for those two pieces of confirmation for our thesis.
Right. Nicholas, tell me, you said you don't think the FAA, the reviews that the FAA is doing now, you don't really see much change in the stock going forward, right?
I wouldn't. I mean, in terms of the panel that the FAA has put together, which kind of follows on some of the action that Congress took after the crashes, I wouldn't expect a radical recommendation or any recommendation from that panel to be radically different than things Boeing has already done. And I wouldn't expect it to have like material effect on the business. Again, they've paid billions of dollars in fines and settlements, not to mention the cost of all the re-engineering and things that we've seen last couple of years. I think optimistically, it would be like a confirmation that a lot of those things are reestablished. And I would echo Colin's points in terms of like the outlook for Boeing with some of the charges hopefully being in the rearview mirror is a cleaner set of financials as they keep delivering on these planes. And there's definitely secular demand for these aircraft, both in the kind of pent-up demand from COVID, but also longer term airlines are growing and replacing their fleets, and that remains the case probably for the next 10, 15 years.
Colin Scorola, CFRA, Nicholas Owens of Morningstar. Thank you both. Good luck there at Boeing. Appreciate it. And thank you, friends, for joining me here every single weekday at 11 a.m. for Trading 360. I will see you at 2 p.m. Eastern Time for the Watch List. I'm Nicole Petalides, live at the New York Stock Exchange. Thanks for being with me. Fast Market is next.
UNG is moving back up again. JBY is still holding that level. This choppy market, man. Looked like it was coming down, that big rip to VWAP. Pentagon is planning to bring Ukrainian troops to the United States for training on the Patriot missile defense system. So we're not somehow directly attacking Russia. We're training Ukrainians how to. Sell our BBY or AMC? Not a bad idea. BY's held up nice. Nice. Oh, the TA on BoxD was right. Wonder if these options are getting filled now at 10. Oh, look, the bids at no liquidity on here. All right, market's waiting on CPI. VWAP. Starting to get bouncy up here. Whiz King. Higher highs, higher lows. I mean, yeah, it's on a little trend up here on the daily. It's right at that resistance up here though. I have a little more to go. Probably more solid resistance would be 24 cents. And if it breaks that, just looking up here, 26 cents. But yeah, on the daily, it's got bullish momentum. I don't have volume here on. I'm not sure how volume. I don't know. I think it's the same with crypto. Nice bull flag there on BBBY. UNG kind of settling down. And it's starting to reject. Day trade that resulted in this day trade. Oh, I did. It was from that, dang it. I closed it so quick. It's from that one stupid box D covered call. Dang it, so... Is that the same day? Oh, one of them was. Dang it. That's so stupid, is that one little... So I had orders to sell covered calls on box D, and none of them were getting filled. One got filled right away. Dang, let that thing go. One got filled, and then the next day one got filled, and then that was yesterday, and then I decided they're not getting filled, so I'll just close the position. So the one that got filled yesterday, I closed also yesterday. I'm not seeing volume up here. Give me the volume. Oh, okay, so there's some volume on these today. 371. So, what are they going for? 10 cents? So they would have filled today, probably. Dang it. Gotta wait on that one, I guess. Up's treating us alright, but I can't do the buy right strategy. I mean, I don't know. Is this one gonna do it? No. And spy back down. Good. Natural gas is it's gonna keep going up. Now back below VWAP. And or middle of day move. What are we gonna get? Hopefully downside, because I think it looks like we're building a bear flag. I can't, yeah, I did that trade quick on BoxD. I didn't look. Should have looked at the warnings. I thought I knew what the warning said, but yeah. It said, if you make this trade, you're in trouble. Good premium farming day. Oh yeah, BoxD.
Of sales. Amazon Web Services only represents 16% of sales, but nearly 71% of operating income comes from Amazon Web Services. So it's still really, from an operating income standpoint, a cloud-based company, which is a technology theme. And we know that technology themes have struggled this year. And I suggest that's one of the reasons why Amazon continues to underperform the other retailers this entire year. In fact, there's a big divergence in October, which you can see there's a huge preference for value-orientated companies. Home Depot was in the Dow. We know the Dow has performed rather well, versus, again, retailers like Amazon, which are growth-orientated, not necessarily value-orientated.
You're right, George. You can compare these companies, but they're really not the same. There's so many different facets to a company like Amazon, and Home Depot and Lowe's are eerily similar in their makeups. Even the fact that Marvin Ellison, the CEO of Lowe's, is a Home Depot alumni. But George Tillis, always appreciate you coming on the show, giving us your thoughts on these companies. Thanks. George, have a great day. Thanks as always. All right, now let's bring back in Randy Frederick and Alex Coffey to the show. Randy, I'll go to you first. You know, Amazon will sell you just about anything they want, but like I just said to George, you can't run out to Amazon to pick up a part or a tool or anything that you might need, but that doesn't make it formidable and encroaching on their business.
What do you mean by that?
Well, there's no question they're encroaching on to some extent. And I mean, I admit I've bought power tools, lawn and garden tools and things like that over Amazon, mostly because the variety is just so huge. But I can't imagine a day where I'm going to order a sheet of plywood or half a dozen 2x4s and have those delivered to my door from Amazon. Maybe I'm wrong, but I can't imagine, or you know, a washing machine. It weighs too much for that delivery, especially that young lady driving that truck to carry up and put it on my front doorstep. So there's definitely some areas where they can't go. And I don't know about you, but if you ever go to a Lowe's or a Home Depot at 6 o'clock in the morning, there is loaded with nothing but contractors ready to grab all the stuff they need to go do the job. They're not going to order online and wait for that stuff to be delivered the next day. They just can't afford to do that. So yes, I agree, they are encroaching, but there's going to be certain areas where they just can't quite compete. But that doesn't mean they won't try, and that doesn't mean they won't nibble away at some of that core business, I think.
Alex Coffey, I mean, Randy is exactly right. there's only so far that Amazon can go in this home improvement space. And the professionals that literally live and set up camp at Home Depot and Lowe's, that's the big variable. That's where Lowe's has to compete with Home Depot. That's where Amazon can't compete. But Amazon has a massive amount of other companies like Amazon Web Services and groceries and all these other things. So these companies are similar in that if you look for a list, Amazon will show up third for home improvement, but they're really not the same, are they, Alex?
No, but I think that you guys are both highlighting good points. I mean, if you need a new drill or a little tool set of, screwdrivers and things of that nature, something quick, somewhat light, easy to ship, Amazon's going to be as good a choice as any. And as efficient as the shipping is, at least to urban areas like downtown Chicago, I mean, that simply could be there within the next 12 hours in some cases. It doesn't necessarily, unless you needed it within the next hour, there's really no reason not to take that more efficient path than, to go to Home Depot or a Lowe's or a Walmart or a Target in person and try to find some sort of substitute on a shorter time frame. But you guys both talked about some of the things that they're not necessarily working on. Things like, let's say, giant quantities of wood or something that a contractor would need to pick up before a job. It's not that Amazon can't do that. It's just, it might not be the most efficient use of their capital to break into those businesses. Lowe's and Home Depot are long established, positioned well, have stores in well thought out areas for this purpose in particular. This is their primary means of generating revenue in many cases. Amazon's got plenty of other things. They're going to try to spend money as efficiently as possible to continue to expand and grow so that you think, oh, I need to buy something, I'll go to Amazon for that. But they don't need to get so niche that professionals are buying 2x4s on Amazon.com instead of Home Depot.
Randy, you brought us a trade in Amazon for today's show. Describe to us what you've created here.
Yeah, so we're just going to do an example on Amazon. We'll take all the information we've been talking about, where they've got their core benefits. Obviously, as George talked about, they have Amazon Web Services, which is something that Home Depot and Lowe's does not do. So it's a completely separate line of business, and it's critical. Yes, Amazon was down 49% last year. It was a terrible year in the markets for everyone, but technology got beat up pretty bad. So that means they're cheap. Does that mean they're a good value? That's a question that we can't necessarily answer. But let's put together an example of a trade where we've got, as we talked about earlier, a CPI coming out on Thursday that could cause the markets to rally again like they did last week Friday, or if it's a little hotter than expected, we might have a sell-off. That makes people a little uncomfortable. We also know that Amazon's earnings don't come out until February the 2nd. As you know, I've done this many times on the show. I try to like to trade away from those earnings. In other words, not be a holder over earnings, because if you look at Amazon, they've had some big moves on earnings. The last one was a big down move, and there's, I don't know if that'll happen again or not, but the best way to not worry about it is just not be there. So I put together a trade that is a fairly neutral, moderately bullish trade that expires only on January 20th. So that's going to be about, a week or two before earnings come out. This is a three-legged trade. It's got a lot of different names. The name I would call it, and this is a name that people use, is called a bullish risk reversal put spread. And what that is essentially is you're taking a bullish position, which is an easy way to do that, of course, is to buy a long call. The long calls on their own are kind of tough for a number of reasons. They get kind of expensive. Time erosion kind of beats you up pretty fast. So the way you sort of make this trade a little bit more affordable is you put on a credit put spread down below it, which will then make this trade a little cheaper. So the trade is basically buying a January 20 $90 call, which gives you some upside potential. That's about $1 or so above where the stock is right now. Then I'm going to sell a January 20 $86 put, which brings in a pretty decent amount of credit to help offset that. But in case I'm wrong and Amazon really goes off a cliff, I want to protect that downside from that short put. So I'm going to buy another cheaper one underneath it, which is an $83 put. What this does is effectively take this long call trade, which might cost me $2.50 to $3, and bring the price down to about $1.60. What that does, of course, is puts my break-even price from the call at being at 90 to 91.60. So a little bit of upside, about $1.60 here, and then you got unlimited upside after that. So your risk is about $1.60 unless the stock drops all the way down below 86. And if it goes all the way down below 83, then you've got the $3 spread risk plus the $1.60, which puts you at about a $4.60 risk. So your break even's 91.60. You got a $1.60 risk down to 86. You got 4.60 all
I like
the way
those
down
trades.
to the very bottom.
But
this basically is a bullish trade
a
with
credit spread
relatively low
that funds
cost,
long call
if
or
you
long
get
put.
a bit of an upside, and it stays away from that high risk zone around earnings.
Basically a free call or free put.
Here's what jumps
As long
out
as
at
you,
me
it
about
stays out of the money on the
Randy's trade.
credit spread.
It's you're only spending $1.72.
They do like somewhat
which is
complex
not
trades on here.
insignificant,
It's funny.
but much less than buying the stock.
To me, it seems
Your
like
margin is only $300, the width of that short put vertical, but you've got 99 deltas, Alex. You've got basically the equivalent of 100 shares of stock for much less.
I'm looking at it, Ruthless.
Yeah, capital efficiency and using options for leverage here is really the crux of this trade. But I think it combines two elements of things that option traders and you know, stock traders and investors alike all struggle with. You're always looking at trade-offs when you do different strategies and you select things. So if we really look at this trade, it's the combination of two strategies. It's selling a put vertical and it's buying a call. Both individually have their positives and both individually have potential downsides to them.
Jimmy or Spy just read it.
That's very appealing to many.
All day.
You need something to happen. If you just
I agree with
for,
them on
say,
the Home Depot.
or something thereabouts,
That's
sure
why I have Home
trading
Depot in my
at,
long term actually.
You would need this stock to move up to 92.5 by Jan 20.
Something there that won't go to Amazon. You know, ever, or something that's being shipped.
But if overnight Amazon ramps up higher to 95, 100, 105, whatever it may be, many investors would be kicking themselves for not capitalizing beyond whatever the credit received was.
Season fireworks to the downside? Yeah, we're coming into earnings season, that's true. DP line earnings. Box D? Oh my god.
I think if you're very optimistic,
I'm an idiot.
Down as bad as Amazon, this is the kind of strategy that many will look to.
I bet those options are getting, 406 volume. 15 now? Oh my gosh. I couldn't get filled for 10 yesterday.
Alex Coffey will stick around for the rest of the show, but we'll take.
We're getting 15 for those now.
Come back in 2 minutes with more Fast Market. See you then, everybody.
Bugger. I've seen a rippin' wish. Let's see. You want me to look at Pow? J Pow? Pow? Yeah, I didn't hear the whole speech, but I think the market took it somewhat bullish because he didn't basically scare the market with talks of inflation or Fed or interest rates or anything like that. So the market was a little unsure, I think, of what he's going to say, and it started to price in some basically scared talks from it potentially yesterday, and that's where that came from, and then maybe even after hours. But then his speech came out, his written speech came out like I think like here 8:30. So it rallied on that, and then we kind of had a little rally after that. So yeah, I think there was nothing that he said that pushed it either way. So the fact that it's a non-event though can push the market up a little bit if it was pricing in him being bearish. I think this week will move from CPI and the data on Thursday. Tomorrow I don't think there's anything. I think with my futures, I want to trade less and maybe try and do the overnight moves like I was doing with options for a little bit. Options on SPY. Yeah, its daily time frame is still looking kind of bullish. It's moving up. Haven't even tested this high yet. Still.
Professional contractor than Home Depot, wins walking away. There's no question about that.
Yes.
This is one of those kind of pair trade opportunities I think we've been talking about with you guys and to your audience for quite a while here. Really like Home Depot quite a bit more than Lowe's. So far it's playing out nicely in the market, and Likefolio data shows that should continue. When we look at kind of the macro trends involved in this, people are not buying homes right now. They're not renovating the homes that they have. They're, the ability to tap into that HELOC or buy a new home has gotten a lot more expensive with interest rates. So that's kind of dried up. And so that was a driving force of people doing renovations themselves or home improvement themselves. One of the reasons people walk in.
I mean, this is year over year. So last year and the year before, I think there was more like home renovations. I think we broke all sorts of records. COVID lockdowns, then stimulus checks. People are just sitting at home, and they had this random money that they didn't work for, and so everyone was remodeling their house, building a deck, adding a shed. It was ridiculous. I think like 2 out of my 4 neighbors built stuff in 2021 on their house, and I was hearing about it and seeing it all over. I mean, it was crazy. So yeah, this has come down, but that's because it came up so much. It's just like the home prices. It's like, oh, home prices have had the biggest drop they've had since 2008. It's because they went insane the last 2 years, and they're still really high. So
pair trade concept.
Andy, long time no talk, and I'm glad that you brought it to this particular chart that we have up on the screen, because this is what stuck out to me when I was looking at the few that you've sent over here to go over. Obviously, the y-axis is the happiness, somewhat in line. You can tell Home Depot is doing a little bit better. Home Depot's circle is bigger. We'd expect that.
I don't understand that chart.
Company. That's not all that interesting. What's interesting is no two companies are more alike in my mind than Home Depot and Lowe's. And the macro environment they're navigating is
what the heck is this?
There has to be an explanation on a micro front that would cause this. This is not a statistical situation where it just happens. This is an outlier situation, Andy, where you have companies that basically have the exact same business, operate the same way, are completely going different directions. You talked about the contractor customer mix. Is that it solely? Is it that easy to explain, or is there more going on here?
No, I think that is it, but I do think that part of it is
news or something
a reversion to the mean, because for a while there we saw Lowe's
really, did the ceasefire ever happen?
Dominating in terms of
that
the
Putin talked about
individual home renovation.
The one-day ceasefire.
Person. They were hitting Lowe's. The marketing with Lowe's was resonating with them far more than it was at Home Depot. And I think really this is a story of Home Depot kind of catching back up, which makes it on a year-over-year basis outperforming significantly. And so I think that's what has happened. I think Home Depot has gotten a lot better at messaging to that individual homeowner to come on into the store, and that's who we're hearing from. They just simply prefer the Home Depot experience more than the Lowe's experience. And that is a shift. That's a big shift from where it was just a few years ago.
Yeah, Andy, I think it's interesting that even though Home Depot dominates the professional market, they still spent $11 billion last year to come up with a buy online, pick it up at the store.
Is this promoting their ticker with Cash App?
To attract even more of those customers. They keep adapting to the new environment that we find ourselves. And this stock, with the S&P 500 up 1.4% the second half of last year, this stock was up 15% the second half of last year. Even though everyone thinks
a rotation
the
to value.
economy and housing is going to slow, their same-store sales ticked slightly higher over the last year. So this company continues to perform.
Is that actually, do people actually trade on there? I mean, I've heard of some people doing it, but
with a slowing
is it popular enough to where it's on CNBC?
It was kind of like,
and they changed they coined a phrase cash tag.
The analogy, when Louisville plays a poorer basketball team in basketball, they might hang around for a little while.
I remember buying like a fractional share on it when they first introduced it to see how it was.
The dominant player is going to beat them most of the time, and that's
Venmo?
what's happening. Marvin Ellison came to Lowe's and started to close the gap ever so slightly, but now it looks like it's going right back to where it was with Home Depot in a dominant position, Andy.
Yeah, you know, Kevin, I have to tell you, your analogy skills are falling off a little bit. Apparently, you're not following Louisville basketball this year. I think the team is 2-12, one of the worst teams out there. Yeah, but what you're saying is right. It won't last. Look, it won't last.
They fixed the moire on their camera.
Depot, you cited all these
the young guy's got
the economy,
stripes on his vest,
housing market, all these headwinds. Another headwind Home Depot is overcoming is less people coming into the store. They're getting much more out of each and every visitor than they were a year ago, 2 years ago, 3 years ago. It tells me that they've really figured out that in-store and online shopping experience in a way that has caught them up or allowed them to surpass Lowe's in terms of the individual homeowner experience. They've got the contractors kind of locked down, but it's the everyday man going in there that Home Depot has really stepped up their game, and it's paying big dividends.
Andy, one last thing before we say goodbye.
Like Home Depot's usually cheaper.
We're looking at 90-day data, so this is pretty quick, and it's moving pretty fast for the most part. Not so fast that it's all over the place, but what are you looking for to see this trade's maybe played out, or this is coming back to normalization a little bit? Because it looks like it's still diverged about as far as I can imagine it ever gets.
Yeah, I think that we'll really know a lot more in about 3 months. That is a huge season for homeowners and do-it-yourself renovators coming into these stores. As we get into spring, the Memorial Day sales are huge for a reason, and so we'll continue to watch the data at that point. But for now, we continue to like the trade that's working, and that is plus Home Depot minus Lowe's.
Andy, I was going to say Notre Dame versus Navy, but I tried to give you a Louisville analogy, and clearly you're right. I need to.
You're head and shoulders to me on that daily.
Georgia TCU.
References. Yes.
Georgia TCU.
Yeah, that would have been a better one. You're right, Alex. That was a better one. Boy, that game was over pretty quick, wasn't it? All right, Andy Swan, thank you for coming on, as always, with your data from Whitefolio.com. As always, have a great day, Andy.
You too. Thanks.
All right, let's get to our trade now, Alex. Now, what I did, if you look at the chart of Home Depot right now, Alex, it has settled into a pretty tight range. And what will break that range is probably the earnings event coming up on February 21st. So what I did, Alex, I stayed ahead of that. I only went 2.5 weeks from where we are now to the Jan 27 expiration. And Alex, I went with the Iron Condor. I went with about a 15-point move from where we are now. Stock's trading about just below $317. On the upside, I did the 330, 335 call vertical. On the downside, the 300, 295 put vertical. That's trading about $1.81. So relatively pretty hefty premium for what we're doing there. But remember, you're looking for, ahead of the earnings, a range-bound strategy that's only 2.5 weeks out. If the risk on this trade, obviously, is about $3.20 because of the move that, $5 strike, collecting $1.80 in terms of premium. So your risk is about $3.20 in either direction. Alex Coffey, your thoughts on a 2.5 week Iron Condor ahead of Home Depot's earnings?
Yeah, I think that's the key, Kev, is, looking for what's going to cause this stock to move. Obviously, the overall market can have movement. We talked about the CPI later this week. There are things that can cause macro movement that will likely impact Home Depot. But on a Home Depot specific front, not a whole lot to look forward to over the next few weeks. And so if you have more of the same from the beginning of 2023's trading, maybe this is just a choppy trade until we hear from the earnings.
Exactly. This has got about 2.5 deltas of short deltas in this trade, collecting theta for the next 2.5 weeks. All right, Alex Coffey, let's take our final break of the day and come back with our third stock that we're going to look at. Of course, the competitor in this show, it's Lowe's, coming up next. So take our last break of the day, come back in 2 minutes with more Fast Market. See you then, everybody.
Party's breaking out. Nice consolidation on BBBY. And after earnings, so the uncertainty is gone, which is good. Today's volume probably be more than yesterday's also. Yeah, this isn't bad. I mean, I think back-to-back runs. I don't know. Might be good. Should probably short some puts on GME. The IV like on. Oh, that's 3 days. Here's the monthlies. Pretty high, 110 to the put side. Actually, it's not that high. That's just so far out of the money. In the 80s. Yeah, it's just it starts consolidating tighter, that IV just drops. I don't even know what strike I would want. I'm gonna wait. I'm gonna wait because I still want I want to get long puts on it. That gas has almost made it back to VWAP, but that's still much lower than I needed, unfortunately. It's good it bounced off that support though. Maybe it will actually keep going up. Looks pretty ugly though. Whoa, party. Party. BYSI looking to retest up here. Maybe a little cup and handle setting up. What did this get to? Not quite to that resistance up there, but to get here. It might not be done. SPY might not be either. Like it wants to go.
Ben Lichtenstein on the TD Ameritrade Network. All right, now let's bring in my co-host Alex Coffey to talk about the third of our stocks today in the home improvement retail. Alex, Lowe's. Wow, it's hard to argue or it's hard to dispute the data that Likefolio just came up with when comparing Home Depot to Lowe's. But Alex, here's one thing that isn't diverging. The chart on these two extremely similar as these two get ready for a mid-February earnings report, Alex.
Yeah, I think that's a critical point, Kev. You know, we made the comparison to last night's game, the Georgia TCU, which was beyond a blowout, Kevin. But, you know, it's probably not fair to Lowe's. They're probably not that outmatched by Home Depot, but they are the smaller of the two companies, and that's notable. But I think you brought up a really strong point, though, with if you really overlaid these charts, at least the shape of them and the general movement has almost been identical. And that should be expected for two companies that essentially operate in the exact same business and are sort of the sole competitors amongst each other. And so I'm not surprised to see that. What is interesting, and that's why I was really talking with Andy so in depth about, you know, why is this divergence happening in the data? You shouldn't expect companies that are so related to be performing that differently, notably differently. One is higher and one is lower year over year. And he provided some of the reasons there. So I thought his ideas of, you know, less than projecting where both these companies are going to ultimately go, but more about how they may fare versus each other was quite interesting. And I think that that kind of insulates you from some of this macro uncertainty that goes out there. That's ultimately how things play out.
Home Depot gets 50% of its revenue from professionals. Lowe's only 25%. They have targeted that as the competitive edge that Home Depot has over Lowe's. Lowe's has updated their store layouts, dedicated checkout lanes.
What does it mean professionals, like contractors?
Pro rewards programs, all to try to lure in that professional contractor. That's where they think the growth is. But Alex, in terms of a trade for Lowe's, not something as bullish or as range bound. What we did there,
the Terra actually looks pretty good here.
Of the Iron Condor, which is just a short put vertical strategy. What I did, I went out to the Jan 27th, same expiration as the Iron Condor in Home Depot, and I sold the 190, 180 put vertical. Now, I took in about $1.50 credit on this, but here's the problem. It's a $10 put vertical. Only out 2.5 weeks, Alex. It's got a little more risk than normal, but this is half of an Iron Condor, but I widened it out to $10 so I could take in the full 150. Alex, I got about 60 seconds. Your final thoughts. Oh, so here's what it is. When we look at how this is trading, it's very similar to an Iron Condor in that is a short put vertical with no call vertical. It's collecting theta about $5 a
Lost
day.
Connection there.
It's long deltas, but this is one that is safely below where the stock is trading right now. And as long as there's a range-bound strategy here, this stock will be just as profitable, but there's more risk on the downside.
Riot, Mara, these ones are on there.
Versus only $500.
Third day or so of a rally.
That's our show for
they look good also. I'm not sure why they're moving so much because Bitcoin crypto wasn't moving. Usually they move the same.
Jenny Horn as well for coming on. That's our show for today, everyone. Alex Coffey and Jenny Horn coming up next with Next Gen Investing for all of us here.
You know what I mean? Isn't that weird? Does seem kind of like a risk on last couple days actually. Terra hasn't made much of a move yet, so this one might be a good one. But I do like where Mara is. Riot, maybe not as much upside left. It's just sitting below that resistance now. Yeah. I'm thinking we should have a retest down here before end of day at least. Seems like Jimmy will probably make a little bit of a bounce. Or maybe not more than it has. But yeah, I was saying it after this day, it looks like we'll probably bounce, consolidate for a bit before potential more downside. I guess it depends on CPI though. So if the market's pretty bullish, might just trade in a range for even longer. As far as upside, people are hyping this month, which I don't know. I just feel like I have to wait for the chart to line up with volume. Because we're past our time frames for moves historically, I think. Unless if you count this, which doesn't line up with really anywhere on the chart prior. Other than January. Yeah, I mean, January is kind of the closest to where it just has one peak and then down. But even that still had the peak and then kind of retested. Dude, look at the range on that. Those are crazy days. %313% from bottom to top that day.
Through charts, one of the most commonly used features on Thinkorswim.
Maybe I should take profits on up. And daily candles. Well, actually, it's not bad. The hammer's on the right side. I think I've read, though, hammers can also be bearish. There's a normal hammer, which I don't quite see, but... Or maybe a sign of a reversal. Maybe that's what it was. You want some Doritos? I've got a Dorito on here. Look at this. See that thing? Yep. Look at that Dorito. Just with lots of breaking supports. The Dorito bottom keeps getting lower and lower. Yep. Rejected, 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 rejected. Rejected, rejected, rejected. Didn't reject. So now I just gotta figure out where it's going to reject. Go up. And then that upside, it might be finding resistance on the top of that Dorito. Maybe not. Maybe it'll break out on this one. Since we broke out to the downside, maybe it'll break out to the upside this time. That can happen. Kind of like how SPY did this morning. Broke out to the upside, but that was false. And then broke out to the downside, which was also false. So maybe a long-term false, and then thing is, the breakout of the upside won't be very big unless it keeps going. Because now this descending line here has come down so much. It'll be like 25 will be the resistance. I don't know if that helped you feel any better.
If you just looked at that 6-month performance, completely different story, although on balance still cut in half.
Right, and I think that's such a good point. The shares have almost doubled since bottoming back in June of 2022 at around 167. They do remain down about 50% from where they kicked off their 2022, but Netflix has been a name of volatility, to put it lightly, and Goldman Sachs today raising its price target on the shares to $225 from $200, but with a sell rating, which is something we get very infrequently. Really,
this thing almost filled that gap from that awful earnings.
Price target does indicate a 30% drop from
That's impressive.
Closing price on Monday. It is, of course, well below.
I didn't think it'd have enough time to rebound this far before it made new lows.
But I also wanted to point
out,
it
was, I mean, that was a huge discount. That put you at Netflix prices from 2017.
Name to report quarterly numbers. That will be on January 19th. That's next Thursday.
Oh, SPY. Looks like it wants to break out the upside.
Again, we've talked about its volatility. Will be interesting to see its fourth quarter report, as this is a name that has actually benefited in terms of its competition. I mean, it actually was fortunate enough to enjoy its biggest years of growth, and more notably than that, its cash burn when interest rates were near zero. Now, a lot of these legacy players that once operated in the cable realm are trying to catch up in streaming, and obviously interest rates are higher. So it's been interesting to see how Netflix has performed compared to, say, a Warner Brothers Discovery, or even, you know, some of its other peers, because it's actually done quite well, relatively speaking, in the last couple months compared to some of its streaming competition, Alex.
Yeah, and I think what I said at the very beginning about how it encapsulates 2022, I think it is right, because you look at a name, it's still been basically cut in half from its all-time high.
UNG looks like it's slowing down its run.
About how it was down towards like the 160.
He can buy more,
doubled from that mark as well.
RC can buy more.
It also shows that, you know, negativity can get overdone as well.
His buy-in price on
GME, much of the volatility in Netflix, Jenny, was on like two
19.
particular sessions. It was the first quarter and the second quarter of earnings.
This run,
and you saw just
tremendous
selling in these names. I think we're down like 40% one day
he's down
in
on those
Netflix
shares
in response to an earnings, which just is absolutely unreal. A little bit more bounce back quarters the last 2 quarters of the year. So there's going to be a lot of you know, circles on calendars for when Netflix kicks off the NASDAQ style earnings for this quarter as well. Obviously a different tone shift than it was a year ago
breaking that high
at this time. But you look at this name, Jenny, it's
all
one of
day.
those original FANG cohorts. It's always kicked off and kind of set the tone of those big growth companies. It's going to be no exception this year. It's just starting from a different place. It's not starting at 700, it's starting at 320, which is sort of middle ground.
Absolutely, and I think I'm going to still keep saying FANG even if it's fallen out of favor. But our next name today now is Bumble. Bumble shares are rising after a KeyBank upgrade to overweight from sector weight with a price target of $27 a share. And the analyst noted economic pressures are obviously
this hourly candle kind of upset the bear flag I was seeing.
For this dating app. He said coupled with
not necessarily the Head and Shoulders, though. We do have wicks up here.
And moderating foreign supply headwinds, they are increasingly confident that core Bumble's app can sustain 20% plus annual revenue growth. In a separate note, he did mention that despite overall declines, average revenue per user growth improved month over month for all brands in December as comps begin to ease. He also did note that Bumble is ramping in international markets and thinks these Forex rates should start to moderate now in the second quarter of this year. So Bumble's 50% off its 52-week highs, has seen a nice recovery, though, about 38% from its lows and hanging on to about a 1% gain so far this year. And also, obviously, seeing some nice strength today, up 6.8%, Alex.
Yeah, you start looking at these names. I'm going to compare it to Netflix as these are kind of both names within that growth space, still kind of pioneering new industries, but they're in different spots. Bumble is one of the main players within this space. Netflix is the main player within its space. When you talk about online streaming versus online dating, I'm going to say up vote for Netflix, down vote for Bumble. This is a stock that's interesting. It's a space that's interesting. I think there was a lot of people who maybe got on these type of apps for the first time during the pandemic when social interaction was limited in some capacities in many places, and it sort of normalized meeting people through an online manner, and so that's a benefit for these companies. But down the line, still, it's still got a long ways to go before ultimately figuring out just how to monetize them entirely. They're only as good as the latest app in many ways. This is the same thing as sort of the social media space. One day something's cool and everyone's there, and the next day it's something else. So finding a way to stay relevant, continue to monetize your users, but also keep that experience positive so they tell people they had a good experience, the more people get on them.
Right, I do completely agree. There's always like an app that's popular at the moment that falls out of favor very quickly. But our next name today now, Illumina, and that name fell as much as 10% actually in pre-market this morning. Now it has recovered some, but still down substantially on the day after disclosing it expects lower than expected earnings per share of roughly $125 to $150 a share.
I just hate trading.
In 2024, this is well below consensus, which had been calling for $267 a share. But the company does also expect revenue growth between 7 and 10% this year. This is the low end of its prior guide for about 10% revenue growth, but not necessarily completely missing their prior expectations. But they are issuing this more cautious outlook, attributing the macroeconomic landscape. They did also see sales of their gene sequencing products moderate in the back half of 2022, which they anticipate to continue now into the new year. So pretty negative headlines for the stock today, although I do want to point out down 5.5%, a little less than, is still a recovery from their earlier losses.
How far up SPY go?
This is a space, I've said it countless times within the healthcare space, particularly the ones who are kind of pioneering new revolutionary technologies in which this company somewhat falls into that camp in the gene sequencing realm. You got to understand this stuff, I think, and it's way over my head. Obviously issued an updated financial outlook. Even I can figure out, hey, if those expectations were for better than what you told us it's going to be, oftentimes it's going to be a company with the repricing of the stock, and that's what we're seeing. But I think this highlights just the risks that are out there with one, investment into things that one are somewhat futuristic or looking ahead.
Maybe
and
a
also,
false break, I don't know.
The risk that you could see with any stock, it's not specific to healthcare. Anytime a company comes out and tells you that their business is going to do worse than they initially expected, you should anticipate that there's going to be a downwards response to that. And so I'm going to say downvote today. I think it's an important mover to highlight. But
this looks good.
Right, and I only understand the gene sequencing aspect of this enough to translate it into
got an inverse Head and Shoulders here.
Words to say.
Also,
that's about as far as my understanding goes.
Island.
Definitely much more
this is hourly, so it's not super heavily weighted.
The weeds here.
But just having a 2-day sustained rally with that big of percentages is pretty impressive. So I think it'll probably come back up and fill this gap. 61%
get
at least back up to this range where it was before that news came out.
84% off its 52.
If it holds it, if it keeps rallying, I'm not sure,
for
but
the year. So despite
it doesn't seem like it's over.
Shares lower today, I think look at the overall picture here.
Yeah, now it's holding up on this.
Morgan Stanley
support.
downgrading the stock today to equal weight from overweight with a price target hike to $220 a share. The analyst sees the stock approaching fair value at current levels after its recent outperformance, and said going forward, Boeing will trade on the execution of its 2025 and 2026 aircraft production targets and its free cash flow generation. And this analyst sees really at this point a more balanced risk and reward, noting the majority of the near and medium positive catalysts for the stock have been realized given its recent outperformance. And that was exactly our prior discussion, Alex, is that this isn't necessarily a downgrade on bad news for the company or the fact that we're seeing a weakness. It's a downgrade on the fact that things have been going too well. We've seen too much outperformance that now this is just somewhat of a valuation reset from this analyst.
Yeah, it's just an acknowledgement of the successes of lately for this company. But you know what's funny is when I was typing this in is something that we should consider looking at. My phone auto-corrected to boring. So I hope Kevin isn't paying attention because I know he loves to talk about Boeing. But I'm going to say upvote here, Jenny, because if you look at the performance of this stock, it's been anything but boring. Over the last few years, it's had micro issues with 737 MAXs. It's had COVID shut down the airline industry. It's then had sizable recoveries as some of those stories started to turn, and we started to be able to go to a new chapter post 737 MAX, post COVID, or at least, you know, letting travel resume to some extent. So, oh man, I've said this so many times, and I stand by it. If you needed a stock to highlight the risks on a macro front as well as a micro front, and then how to navigate those, and just I wanted a whole chapter on it, Boeing could certainly fit that bill. So I'm going to say upvote for Boeing. I'm excited to talk about this one.
And Nate, I think Boeing would actually welcome the concept of being boring. It has been a volatile years, even pre-pandemic.
Looks like a similar pattern to GME on the yearly almost.
So I think boring might be a welcome chapter in Boeing's next, hopefully
same sort of consolidation bull flag,
given some
but
of
GME
its volatility over the last
the
few
support.
years. But we'll move forward today with our upvotes, those being Netflix
crazy.
well as, of course, Boeing. We'll be discussing the technicals in both of these names and looking at some example trades coming up next. Stick around. Next Gen Investing. We'll be right back.
Maybe we'll see BBBY played out better and break to the upside. That would be neat. Anyone on Discord want to play letter game? It's just Scrabble, I think. I haven't played Scrabble in so long. Is veal a word? How do I do this? Do it like that? Letter. Almost pass through center star. I do it like this. Invalid placement. Ah. Invalid word. Spelled with an A, I think. Oh, I'm in overtime? Let's just do go. Go. Spy's rejecting, that's good. Smooth. Good rejection on Spy there. What am I playing? My turn again? I'm playing myself? I like that rejection on Spy. UNG looks like it's tired. Dang. These the same oh, that's right, I keep the same letters. About geek. Invalid word? That's not a word? Go again. Can't do it from the bottom up. Cog. Do it backwards. KOG. Oh, it's C. Never mind. I have evil in here, don't I? Do I have to do it on those letters? Yeah. It's been so long since I played Scrabble. Gil? Wait, how is GI is a word? What? Wowee. BBY, bouncing off of that bottom. Pause? What's that say? Oh, I can swap tiles? I don't know why I'm... Guess I was playing with myself. Spy rejected that. That's good for me. BBY getting a little jumpy here. Did a bit of volume.
Where price bottomed out a couple times
Netflix.
Before we had that huge gap downward. So right around here, you can see that it bottomed out there and there. So we've got the 330 level to contend with. We're right below there. We've also got our moving averages to the downside. We pushed above all three of them in pretty rapid succession recently. Now we're clawed our way above that purple 252-day exponential moving average. That would be the first one to be looking for some support, though. That would be roughly around the 309 level, would be the first one of these moving averages we'd have to contend with to the downside. The one that really looked important, though, was the orange 63-day EMA right around there, because it's in confluence with our lower trend line. So that's right around the 286, 287 level. That would be an important one to look forward to as well. And an interesting thing that happened as well is that as we moved above those moving averages here, the RSI also broke above its midline. So it rose above that 50 level, which demarcates the difference between bearish momentum and bullish momentum. And we're on the move upward once again here.
Yeah, and Rick, a name that we're looking at that $330 level as a sort of marker here based on its price action right now around $324 a share and also up over 3% on the day. So a name that's definitely seen some upward momentum. However, there are still naturally the critics in this name. I feel like with the applause comes those loud booers right now that basically are rooting against this recent run up in Netflix. So Alex, considering that mindset and considering there is a case always to be made in the more bearish, mindset here, walk us through a trade that does lean more neutral, but perhaps then bearish in nature.
Yeah, one thing's for sure, when you look at Netflix, there's always exceptions, and oftentimes implied volatility will overstate the actual volatility that you see. Netflix has been anything but that. If anything, even tremendous amounts of implied volatility has understated the amount of volatility that we've actually gotten over the last year in a name like Netflix. So it's been a tough,
maybe Party's pulling up
BBBY and wrangle with the tremendous amount of movement that it's had. And so even if you want to bet, with or against the trend in this name, using a strategy that affords you a little bit of room might be something investors look to. And so that's kind of what I looked at here, leaning neutral to bearish in this, acknowledging its recent run up, acknowledging the analyst sentiment. I believe it was from Goldman on this one that was certainly more bearish with a lower price target. And then also what Rick had highlighted, which is that this gap has been entirely filled. Technical analysts would argue that's the easy part. Now it's the hard part again. You have resistance overhead that you have to work through.
Analyst.
And using that to the advantage here of this kind of strategy that is looking for resistance to ultimately hold. And so looking to sell an out of the money put, or out of the money call vertical rather, the 365, 370 call vertical in Netflix for $1.25 credit. That's
probably a good trade.
3-1 risk reward in which we're risking
call credit spread.
$375 to make $125. So you can kind of quantify then that it's a high probability of success trade, which makes sense with the break even up at 366.25, almost a $40 cushion from where we're currently trading at about 325. And you can see we're in that max profitability zone. So all you would need with this type of a trade illustration is Netflix to simply not go higher. Doesn't need to go down, it just can't go higher, or actually can go a little bit higher as long as it doesn't break through that 365 mark through that expiration. But in the event that it does, and it does work its way back up to those more lofty levels, then you do have risk definition here. $375 in risk is where it caps out, and that takes place above 370 if these options went through the assignment and exercise process and offset for max loss, in which that spread is $5. Net of the $1.25 credit. None of that accounts for transaction fees, of course, but just theoretical look here at this one. Neutral to bearish, one way to express that using options.
And like you said, this is not necessarily a negative trade in Netflix. You just need it to not go up. Kind of like our next story, which was our Boeing discussion today, that it's not necessarily a downgrade. It's just not necessarily saying that we see further positivity from here. So Boeing has been an interesting name over the last 3 months. Rick, I pointed out it's risen over 61% coming into today's session, just over that span. So what a run up this name has seen. But I guess right now a lot of the community is wondering is, can this hold?
Well, that's a good question to ask here, because we're coming pretty close to the changed price target near 220. This blue dashed line right here that we've been looking at, 220 matches up with the old highs from all the way back here. So we can see that that's maybe perhaps the justification for choosing that price target. But you mentioned you accidentally called this stock boring. This is actually, in my notes I wrote, it was a pretty exciting situation today here, because we're seeing a breakout from beyond our upward channel here. We broke above the upper level of that trend line, and we're retesting it today, but we're still green. We're still holding on to some of the gains that we've made since the open. So pretty notable situation here. Sign of strength that we're breaking above this trend line. And also in the RSI, we're in the overbought area. You can see that it's breaking above the 70 level there, which is a sign of strength. Contrary to the name, overbought maybe sounds like it's gone up too fast, too quickly. That's not the case. The way that this indicator is interpreted usually is that going into the overbought area is regarded as bullish, oversold area is bearish. Now the exit from the overbought area would be a more bearish sign here, and we are slipping below it today as price wanes a little bit here. So keep an eye on that one heading into the close.
I don't really look at RSI. Yeah, I don't use RSI quite like that.
Overbought area as well. In terms of support and resistance, that 220 level seems like a very likely area to encounter some resistance or consolidation in trend. Likely that
not coming back to VWAP yet.
That is, I mean. And
natural gas is moving up.
We've got our yellow 21-day exponential moving average right here, near about the
barely
194
broke VWAP.
level, just above our lower trend line, and that would be not quite in confluence, but they're pretty close to each other. The lower trend lines maybe around 192 or so. Beyond that, we've got our two moving averages to the downside there, near about 177 and 171. That seems like a pretty far cry at this point to be worried about, given that the stock is trading above 206 right now. So yeah, basically a pretty interesting, noteworthy situation for a company that's had a noteworthy year.
Right, a noteworthy year, and hopefully that can progress into 2023. And I kind of feel like I'm rooting for Boeing just based off of the onslaught of mass negativity that has hit this stock for the last 3 years. So I do see and appreciate the recent run up in this name, and Rick will leave it there. But good technicals in Boeing to look at today. Rick Ducat, our chart master, every day on Next Gen, of course. And Alex taking this optimistic approach, as I love when you can see a stock that has continued its run up. I feel like a lot of these rallies have faded or been rejected at certain levels, but this has continued. Walk us through example trade, then leaning more neutral to bullish.
Yeah, just taking the trade that we looked at in Netflix, Jenny, and just flipping it upside down. The same general concept. So rather than needing Boeing to continue its rally, just rather hold its rally. Don't want it to go down. That's kind of the concept behind this. I think that's the
like
sentiment
this
from
gap
the
to start
analysts
getting
as well.
filled.
It's not necessarily a bearish call. It's just more of a, hey,
neat.
cool off for a second here. Let the rest of the market maybe catch up to the outperformance and then continue with some positivity here in the stock. Rick had highlighted just below the 195 mark, but both those measures that were determining that support are upward sloping. So as time goes on, it'll work its way towards potentially 195, and that's sort of where I circled and went to for the short strike here on this short put vertical strategy that we're looking at for the trade illustration. And so going out to February, the same monthly expiration as we did in Netflix, February 17th. The 195, 190 put vertical for the
credit
exact
spreads.
same credit.
They like the credit spreads too. I like them.
$1.25. So risk reward identical, 375 to 125, 3-to-1 ratio on that. Break even of 193.75 kind of coincides with what Rick was talking about with that moving average and that upwards sloping bottom part of that channel that he had highlighted on his chart. But again, as those move out in time, they are moving upwards right now. So potentially those support levels could just continue to increase if this could hold on to some of its recent gains. But looking at this for this one, obviously in the max profitability zone already, just needs to hold on to that. A little bit of cushion of about $10, $11 until we get to that strike if it does turn sour. A little bit over a month or so in this trade if it was held to expiration. Best case scenario would be that these options expired worthless. But in the event that Boeing does slip, it is risk defined, as we said. Max loss takes place below 190 if those options went through assignment and exercise and offset each other for max loss on this one. So really just showing the exact same strategy, but in the neutral to bullish sense instead of the neutral to bearish as we did in Netflix.
And utilizing a more neutral stance and, of course, just being straight in your conviction with neutral or, bullish or bearish. But also important to keep in mind, for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now, coming up next, we will talk Coinbase actually having a really nice day despite news that we got that they're laying off 20% of their workforce. We'll dive more into the crypto.
Maybe that's why Mara and Ryan are moving up.
Next.
I don't know. That gas kind of rejected. VWAP hit. Foxd made a move back up a little bit. Party City, not even just resting, really, just climbing this ladder to bankruptcy Valhalla. Take BBBY with you. All right, Bed Bath going through VWAP. Let's see it. Yeah, the bond market's been dumping today. Kind of interesting. Yeah, they're not matched up. See, end of day, if the bonds rip up or if the market comes down or some of both. There's BBY. Volume coming in. It looks like it wants to break to the upside again. Hmm. 1%. Looks like, I don't know. Looks like it wants to keep going though. Oh yeah, it just broke that resistance. Yeah, there it goes. Oh, not gas. Broke VWAP a little bit here. Oh, Natgas, big move up. Big break of VWAP. GME moving up with the market. I think want to wait on CP Live before I do any short puts on GME. Liking this daily candle on UNG. We can keep it up. Alright, that's new highs on the day. Look at this thing. Kind of breaking that resistance back here, which is bullish. Might be a good long. I'll wait for a little cool off maybe. I'll just go with shares on Mara. Oh, that's up. Yeah, you can do like a spread on here. Little debit spread. Market is ripping more. Now, do I take losses here or hold through the rally? Really buying this bounce. Calendar spread.
just risk right now is so important, especially in a name with a lot of risk like Coinbase. But that does it for our FOMO segment today. And now coming up next, we will talk the cruise lines, the names that have actually performed quite well so far this year. We'll dive into why one analyst feels that we can see some strength in Royal Caribbean and some not so strength in Norwegian Cruise Line.
This chart actually looks good on Coin. I don't know why I would do a calendar spread though. The shorter term options are going to have higher premiums. So I don't know why I would buy that and then sell longer term. I don't quite understand the strategy, I guess, with it. But yeah, this looks good. Oh, UNG is gonna keep going. Do it. Do it. Do it. Do it. MGAM. I don't like that chart as much. Party. I don't actually like Party's chart either. I was thinking it could keep going. It's getting back up to that same level, just like BBY. So weird. Looks like it's maybe giving us a false breakout up there. Or just consolidating before more ups. I try a safe debit spread on Mara. Wonder if the market comes down from CPI. Might not be a good idea. Still don't really actually know the catalyst for these rallying. Does Bitcoin climbs a multi-week high? Doesn't seem that high. Rallied a little bit. I guess just from this, after this huge drop, this seems small, but I guess this is a pretty good move. Yeah, I guess that's probably what it is. Kept looking at this chart thing and this hasn't moved at all, but move some. All the shorts on those crypto exchanges probably taking profits. Causing a rally. Beachbody's a penny stock? Yikes. I like this chart also. GME better buy Newegg before it rallies anymore. Like SPY wants to keep climbing up above that support now. Here it goes. Ten minutes to 2. Sometimes you get volatility around the hours. Already almost 70%. Oh, it's crazy how it's like commonplace enough for bankrupt stocks to short squeeze that articles come out about it. I don't know. I'd be stoked if BBBY's, if it does go bankrupt, it'd be unfortunate, but I'd be stoked if their bankruptcy rally, if there was one, is starting here where we are and not lower. That was my only concern. Like, yeah, there might be a big move, but will it be 50 cents when that happens? So if it's the bottom is $1.20, then a move up to $5, you know, it's big, but not as big as a move from 50 cents up. Not nearly, actually. So yeah, I could see this is kind of the next big resistance at 450. So if it did make a big move, I could see it coming back up there. Maybe 420 here. And who knows, it could just keep going, but that'd be a spot I'd look to first. Yeah, even with these moves, it's still not overbought. It's moving up slow enough, and it's not gotten crazy yet, which is kind of crazy. Which, yeah, it's not gotten crazy, which is crazy. And so, yeah, it's been good. Very, very tame, big percentage days. Oh, natural gas. So I might want to reject VWAP. Or if I should cut losses on this thing. Probably should. I should have last night. I don't know why I was thinking, oh, it's going to start gapping up. Bounced off that support today, which is good, but
marketplace, but they're demonstrating sequential or quarter-over-quarter declines. And so with that said, the expectations on earnings for Box, which are expected to be around $1.17 a share in the next 4 quarters, might be challenged because of some deceleration in growth prospects in their Japanese core market. So I think that's one of the reasons why we see RBC downgrade the stock. I think it's more of a modest downgrade. It's not necessarily a sell rating on the stock. The trend is still intact. If you look at it on a 3-year weekly chart, it's actually been performing quite well. The lows are right around the pandemic, where I think $11 or $12. So since then, the stock has more than doubled.
You know, George, I have a feeling this analyst might be a fan of the show, because one of the key points that this analyst highlights is something I feel like I say and ask you about every time we talk about one of these up-and-coming tech firms, which is what happens when Microsoft decides to swat the fly that's just kind of annoying them. And it sounds like that's another thing that RBC is highlighting here, because they're saying a threat from Microsoft and its underinvestment in SharePoint and OneDrive. All it takes is a little bit of focus, and what is Box going to do?
That's a great point. At the end of the day, there are competitive challenges, especially with the vertically integrated behemoths like Microsoft and Google. And all they need to do is, like you said, Alex, make a small amount of investment to enhance their services to perhaps outcompete companies like Box Incorporated. So I think these are risks that you have to consider. And it's really the competitive landscape risks associated with major storage competitors, like you said, Microsoft and Google. But at the end of the day, the market will tell us. It'll tell us essentially when there are challenges from a competitive front. The company itself will start either downgrading its earnings guidance, missing earnings, or effectively demonstrating deceleration in revenue and EBITDA growth. Now, for the next 4 quarters, the company is still expected to grow 12% revenue growth. Now, that's a little bit less than the last 4 quarters at 15%. But at the same time, they're expecting their EBITDA growth to grow at 20%. Now, that's probably going to change now because of the analyst downgrade from RBC. But at the end of the day, this is the information we have. EBITDA growth is nearly double that of sales growth on a forward basis. And that's promising for an upward trend. But again, once they report earnings, when they report the Q4 earnings, if they demonstrate earnings and sales that don't manifest into expectations, it might start to pose a challenge for the company's stock price. But until that point, I mean, the trend is still higher. It's still trading above its 50-period moving average at the very least on a weekly basis, despite the decline today. So I think what you're saying, Alex, is poignant. It does make sense. That is a threat to the company. But there is another avenue where a company like Box, which is profitable and is growing its revenue and EBITDA on a forward basis, might become an attractive target for other competitors out there. I can't say who it would be, but it's just something to consider.
Yeah, and George, like you mentioned, it is up about 26% off its 52-week lows here, but a rough start to the year, now down about 9% since the start of 2023. But we'll leave it there. George, appreciate all of your insight and filling us in on Box, a company I admittedly did not know a ton about other than their Salesforce partnership. But George Chillis, senior markets contributor for the network.
What does Salesforce do again?
Alex and myself for Next Gen Investing for this Tuesday. Coming up next, we have the watch list.
Oh, party. 81%. Okay, BBY's next. Look at that. Move all the way back up to its levels. Hit that resistance. Yeah, I'm gonna wait because now that I can't even day trade the calls, I'm gonna wait to sell them on BBBY. Because if I couldn't get out of those ones I sold yesterday, they'd be down today for sure. Oh, is Bowman talking? We have a lot more work to do to lower inflation, he says. Inflation is much too high. Expects additional rate increases be necessary. Size of future increases will depend on data. Fed will need to hold rates for some time after last hike. I don't know if that's recently been said. Fed is evaluating the issues and what regulatory approach should be on crypto activities. Oh yeah, this was from earlier today. Atlanta Fed GDP Q4 is 4.1%, previous is 3.8. That came out today at like 2. Wait. Oh yeah, just a couple minutes ago. That could be bullish, I would think. However, that's bullish for the economy, bearish for the market. ECB's Centeno says we are approaching the end of the interest rate rise process. Just got like a Twitter dump on Discord. Spies working out to the upside. Goldman Sachs is cutting 3,200 jobs. One of the largest layoffs since 2008. What the heck? Look at that gap. Right at 2 o'clock. Look at that. I don't know if that was data driven or algos, or I don't see anything that came out yet. Any news? Bankruptcy can be great news. Short sellers close and can get a little squeeze play. Yeah, Party City loves it also. I don't know what that gap was on SPY. That was weird. Whoa, Party City almost 100% now? Oh, jeez. Okay, okay. Wonder if this is from the GDP numbers. Oh man, SPY's squeezing now. Ugh. Party City, man. I just can't help but think BBY is next. 102%. JPM trading desk says inflation data on Thursday could spark bear market rally. So if they think that could spark a bear market rally, that's going to be sparked right now, and then it could sell off when the good low CPI data. That's what I've been kind of predicting is. But then yesterday with how much profit taking it looked like there was, wasn't sure if the rally would keep going. But this could have been in anticipation for Powell today. Then Powell today didn't scare the market, so might as well pump. Party City. Fed releases minutes of discount rate meetings through December 14th. Directors at 3 regional Feds sought unchanged discount rate. Directors at 9 regional Feds sought 50 basis point discount hike to 4.5%. So they're saying 4.5% terminal now. That could be part of the reason for that pop. Just watch Party. It's way more exciting. Nice reversal candle at the resistance SPY. Let's do it. Time to reverse. Back to the lows. Oh, natural gas flushed. Last tweet? I have no idea. It means something cryptic, potentially, or he's just kind of trolling. Or maybe some of both. I have nothing specific. I mean, I trolled Discord and said Titanic sinking, GME sinking, but I really don't know. I think he's mostly, I feel like, trolling with those. Party, man, just a little red candle and just boom. Broke through those. That put BBBY. Yeah, that put it up here like $2.50. Whew. Right back up. It's like it wants to break that resistance. Let's see, what should I do? Well, I could even just flip long, but it's a bad whipsaw then. Close, hold. Already back to 100%. Maybe Party's just catching up to BBBY's share price. $1.90. There's an RSI divergence there on UNG on the hourly, so I don't like that much, but SPY moving up more. They could be setting up an RSI divergence. Maybe diamond-handed BBY. Yeah, I saw the diamond. It's actually a ruby. It's not a diamond, but it is a precious stone. Yeah, I never never thought about diamond handing BBY. I just thought diamond hands. Diamond hands, or diamond hands. The only thing that's gonna survive against naked shorts. She's naked in the scene. I don't know, but yeah. Probably close it if this actually holds above here. Bad day. And natural gas had a weird pump drop. Looks like it's I don't know if it's going to come back up. Red diamonds are? Interesting. The diamond and the rest of the quote? What? In the movie, she said diamond? She said, draw me while I wear this diamond? Oh. I think in the movie, though, it's a blue ruby. Or is it a blue diamond? I could be wrong. Maybe it's a blue diamond. I thought it was blue. Where are you going, spy? You said diamond, okay. I believe you. Oh. I don't want to keep holding the natural gas contract. I don't know why. Hmm. I might hold it. I mean, it did bounce off that support today. So not sure if the bounce keeps going, but And there goes SPY. So maybe I should flip long. I don't know. If it keeps melting up from here, it probably has upside till 390 at least. 390.81. It's such a stupid spot. Didn't trade the range today. Going for the breakout, which I hate to do. I mean, it did break out, but it was just false. To both sides, it was false. Birds is held up from that rally it had. And there's new high on SPY. New daily high. Natural gas is just getting volatile, man. Big candles.
Bottom might be in, that can give them more confidence.
Right. And, just to get your big picture on what we're seeing in the markets, Mark Newton, who I've known and is a technician, he was looking at certain levels and in fact showed some concern. He thought the S&P bounce that we're seeing is going to be running up against resistance, sort of a bear market bounce, and that's likely to break and retest lows in December. He said the key level is near 39.50 to 70 for resistance.
Yep.
37.94 to 3800 for support. I'm not asking you to take on his calls, but do you think that's, I'm not asking you to take on his calls, but I mean, that's basically what a lot of the traders are watching.
Is. And the reason, Nicole, is because if you're watching it on a day-to-day basis, the market can be a little bit much, right? You can get way too much information. But if you pay attention to something a little more long run, like a weekly chart, there's a lot of visual reflection that it eliminates a bunch of noise. And the first thing that stands out is we're still looking at lower lows across the board in the SPY. The area where we've got a little discrepancy with that has been in the diamonds. It's been the one that's been leading us. Certainly feels like a little bit more a value proposition play in the shorter term. But I agree with that assessment, to be quite honest. I mean, yeah, we've had a good week. We've even had a great start to the year. And ultimately, I know that so-called January effect can have an impact on us. I tend to believe that has an impact on us later in the year.
I'm not sure. I think sometimes it's kind of
my fear is that you have individuals
attached
utilizing some
and just moves with the market. Other times it's just kind of breaks free. So BBY I don't think has been really moving with the market much the last couple days. GME for the most part has. I mean, look at this chart; it's pretty much the same. So it kind of goes. I think it gets like turned on and off, honestly. And then if GME's ripping, or whatever, and market's just doing just chilling out. Once GME's rally stops, it's pretty much always with the SPY though. You'll see the SPY kind of sell off, and it'll be enough to trigger it to turn on or whatever GME to shut back down.
Just this week alone, it's up 47%. It's only Tuesday, right? So Monday and Tuesday, it's up 47%. Much more coming up.
Oh, BBBY. Glad looks like it's rejecting up there. UNG. Yeah. Engulfing candle here on the 5-minute. Might be a nice short here. At the high. This is the patience I needed to. I need to wait for this entry right here to short. This would be, I might actually grab one of the small ones. Yeah, I don't have margin for it. Yeah. This would be a nice short though. Got an engulfing candle, it's at the resistance. Now, if it comes all the way back down here today, that would be a pretty volatile day. Might have to decide to hold these. Natural gas, it's just like big candles up and down around VWAP. It just looks like it's gonna dump, and it does, and then it just rips, and really undecided there. Oh, here we go.
Continue. The story is a tough one for Bed Bath & Beyond, and don't be fooled by a big move this week where it's up almost 50% in 2 days. Seth Basham's with us, Managing Director Equity Research at Wedbush Securities, where in the last note you had an underperform, you had a $5 target, there was a lot of concern, and now we're hearing strategic alternatives seem to be the way to go here. Where do you stand now?
Yeah, sure. We still have an underperform rating, and our estimates are under review, as is our target price. But this is a company fighting an uphill battle right now. They've lost a ton of customers. Their sales are reeling. They're down by a third in the fiscal third quarter, and they're losing a lot of vendor support too. Without vendor support and the inventory to sell, they're not going to be able to make it across the finish line.
When I see bankruptcy, you know, you always think, oh, bankruptcy. But in this case, as I was reading through your note, you said bankruptcy could be a good way for them to restructure their debt, provide some liquidity, and could it save them?
I mean, ultimately, could it save the brand? The answer is yes. In a bankruptcy scenario under Chapter 11, the company will be able to terminate leases of its stores that it does not want to operate anymore, where they're unprofitable. You can't do that without huge costs outside of bankruptcy. So that's one thing. And then secondly, restructuring their debt would be easier in a bankruptcy scenario as well. So to get this company on firmer footing, get vendor support, I think bankruptcy protection would be the best case scenario for the company's long-term survival. Of course, that's not a good scenario for the equity.
Is it worth it to preserve the brand? Because maybe, you tell me, they have a credibility issue in that their vendors don't really want to work with them at this point now, right? Because they're worried about you know, whether they'll get paid, and consumer re-engagement may be tough too. Consumers have gone in there and seen nothing on the shelves or tons of discounted stuff they don't want.
Yeah, there's still a lot of brand equity in the name Bed Bath & Beyond with consumers. So I think that there is good rationale to preserve the brand. The company's made a lot of operational missteps and some strategic missteps over the last couple of years too. So it's not to say that it can't be saved. So I think that the company will likely restructure. They'll probably become smaller, but there are a core set of customers that still enjoy shopping there. The vendors, getting their support again is critical. And that support comes more from the perspective of having the confidence that they'll get paid by the company. So if there's more liquidity behind the company, vendors will be more likely to ship to them.
Yeah, and at this point now, when we think about the brand itself and we think about what the other companies are doing, I mean, where were the missteps in the first place? Why is it that Abercrombie and Fitch can come out and say, hey, we've seen demand and things are looking good and we're raising our outlook, and Bed Bath & Beyond has just been one bad quarter after another?
Yeah, well, the home furnishings industry overall is in the doldrums right now. So that doesn't help the backdrop. But from a misstep standpoint, some of the biggest ones are around merchandising. Under the former CEO, they tried to put through a lot of private label merchandise that didn't really strike a chord with their customers and sent them out the door rather than in the door. And the current management team is trying to reverse that. So that's the biggest thing. You know, secondarily, this happened all at the same time of the global supply chain crisis, which made it even that much more challenging to get product on the shelves. And then last, during this time period, that management team misread the situation with demand, thinking that it could persist strongly for the industry for years to come, and bought back a lot of stock, which weakened the company's balance sheet tremendously.
When we talk about strategic alternatives, and they're considering all of them at this point, we did talk some about bankruptcy. What else is there? I mean, there could be an acquisition of some sort. Maybe a bigger company takes it over. Is that in the cards? What do you think are some of the most likely moves that the company may make at this point this year?
Yeah, that's not out of the question, and that might be one reason the stock is rallying today. Secondly, I think from a near-term perspective, cash flow is likely to improve in the fourth quarter, but it's more of a seasonal improvement than an underlying improvement in our view. So I think other opportunities for the company are pursuing what they're doing right now, which is cutting more costs, trying to get more inventory on the shelves, and telling consumers that they're open for business. So those are the tactics that they're using right now. It's very questionable whether they'll be enough to save this company and its equity right now.
And I know, yeah, the equity is the key part, right? Because we always said the bondholders, the preferred shareholders get paid out way before the equity, just common stock. So at this point now, you would consider it a risk to get in there and buy. It's under $2 at this point. But if there were to be a takeover, what would it be worth? And is it worth somebody who wants to play a high-risk game and say, hey, you know what? I think they might be taken over. I'd like to buy some of this around $2.
Wow.
Because I think if they get taken over, it's worth whatever, $5. What's it worth?
Right. Yeah, I think it's highly unlikely that there'd be a financial buyer for Bed Bath & Beyond right now, meaning private equity. A strategic buyer, another retailer, that's a possibility if they find a use for Bed Bath stores. There had been chatter about that in the past, but in this retail environment, it's really unlikely that will be the case. So I see that white knight scenario being pretty unlikely at this point in time.
I mean, they could become Amazon warehouses. Seth, I'm glad we got to speak about this. I look forward to hearing what we have to discuss next time about Bed Bath & Beyond, because, you know, everybody loves the store, but it certainly has been struggling. Seth Basham, thank you, at Wedbush. Appreciate it.
False break.
Up next, we'll talk all about energy. Consumers have been paying a lot.
I closed my nat gas. Party. Whoa. GME did pop. I bet it popped on that this break. This SPY pop right here. Sometimes you'll get the pushes to the upside on it. Also. That's pretty significant. That's maybe pulling up BBBY. I saw it moving a little bit. There's a little volume spike there too. Market might just be getting squeezy in general. Interesting. Jeez. This daily candle is gonna almost engulf yesterday's now. Setting up a bull flag, bullish MACD. Just big ranges from yesterday's high. And just selling off most of the day. And today just chopping around forever and finally maybe breaking out. Weird move on GME. Was there not news? Was there Mercy tweet or something? Not crazy, but an outlier. Maybe someone's starting to buy. An engulfing candle in the daily would be a good sign. Especially if this volume is more than yesterday's. This could be the beginning of just a little bounce up to like resistance up here. This 1940 resistance. For another retest. Maybe not the beginning of like a more major run. Max Pain is at 17 also, so see him move up here and then back to Max Pain. It's a nice little pop though.
As investors really come to grips with everything the Fed said and in anticipation of some of the data due out later this week. What I also noticed here quickly, Nicole, is interestingly enough today the indices are higher, yet rates are higher, and so is the dollar.
There
so
you go,
not
SPY.
the
Reject
normal
it.
dynamic that you'd expect to see, but I think it's a reflection of how investors are kind of looking for a little bit more information. We've talked about the wider range that we're hanging out in and how the S&Ps have been comfortable
the indicator
around
for the
this
short
39
there,
handle.
it'll shake you.
Yeah,
That still
you know
stands.
What? Not
That
gonna buy
golfing.
It. You're right. You can't have the markets, the dollar, and rates all higher. You know what? You're absolutely right. That's a good thing to point out because you don't often have that. Something's got to
Yeah,
give.
there's a divergence here
Story
between
of
the
crude?
bonds and the
I mean,
stocks.
we're going to be talking about energy more later in the show, but what are you watching?
So market has a long ways to come down.
A bit of a rally recently off
Or
the
the bond
December
market really has
lows.
to
It's
rip.
kind of topping out right now around 75, 76. It's coming off a little bit after reaching that level earlier today. But you can see we're hanging out near the lower extreme of the range that we've established. Well, last year up around that 130, 120 level down to the lows that we saw in December around 70. Now, really got my eye on that December range, though. We're talking 81 to the upper extreme, 70 to the downside, and crude for the most part hanging out in the middle of that range. Keeping an eye on, again, inventories later today. We'll hear from the API, we'll hear from the EIA tomorrow, but there's some uncertainty in terms of demand. China, you're talking about, the Fed and this initiative. I just mentioned some of the Fed comments earlier, and higher rates for longer, the impact that's going to have on the U.S. economy, the likelihood of a recession or lack thereof, or even just a slowdown in terms of the global narrative. So keeping a close eye on that, but also watching this China reopening trade, as I mentioned. And then I also just wanted to point out here, we were talking about the dollar a minute ago, and I noticed a couple things. The dollar's in the middle of the range that we established last year, 94 up to 114. We're hanging out just below 104. But crude, I think, an interesting story. You normally expect to see kind of that inverse correlation to the dollar, but I think in this instance,
That
you've got
dollar's
that
also
demand
up.
narrative, which really weighed
And
on
the
crude at
market.
the end of the year. And you've got a range last year. We're talking up around
Definitely some disconnects.
130 down to, again, that $70 low that I mentioned. So in the middle of that range, crude to be at 100. So again, hanging out around 75 really speaks to the demand concerns that we've seen and the recession uncertainties that are weighing on price.
All right. Thank you for all of that and a good setup for our next segment. Ben Lichtenstein, thank you. Let's
Lichtenstein.
continue our focus on energy. Joining me right now, David Holt, President, Consumer Energy Alliance. Thanks for being here. So we've obviously come well off those highs. Where do we stand? What does it mean when we're at $75? What does it mean for consumers in the global picture?
Well, I think there is a lot of uncertainty. It's going to be a demand scenario and an inflation scenario. We're looking at maybe China coming back online a little bit from a demand perspective. We have ongoing uncertainty in Europe. We have ongoing regulatory uncertainty here in the United States. So there's a lot of market pressures for kind of that upward movement in the price of oil and therefore the price of gasoline and diesel as well.
Mm-hmm. Are we more likely to move higher or lower going forward? I mean, I hear what you're saying. You're talking about the demand in China reopening. I mean, so it sounds like higher, but I'm going to ask the question, where's the path of least resistance?
I think we're looking at more likely higher than lower. I think that the demand curves look like it's going to be a little bit higher. You're also seeing a lot of restriction in the U.S. market around oil and natural gas, which continues to put kind of pressure on the overall system. You know, the United States and China are number 1 and number 2 in oil demand in the world. So as those countries move, so goes the price of oil, if you will. So we're looking at more demand growth in China, especially, that puts upward pressure on the price of oil and puts upward pressure on the price of energy across the board.
Yeah, I just
Thanks,
saw a
girls.
headline
Appreciate
going
it.
by about Janet Yellen talking about the caps on
Oh,
Russian
Jamie's still
oil.
going.
It seems to be working, basically. I mean, we started to get concerned that there may be more threats from Russia and that they might just turn it off altogether, or they wouldn't
Cheers, man.
tolerate the sanctions that are being put against them. And somehow it all seems to be flowing, no pun intended. That's a real wild card, isn't it?
It is, and it has been for a while. You know, I think when you look at what Vladimir Putin was trying to do in the Ukraine,
significant here.
it was all contingent on his control of European energy, both natural gas, largely natural gas. So I think he was expecting the West to blink a little more than the West has to this point. And he's still relying on a few more months, maybe, of a cold winter in Europe to continue to put pressure on the overall system. So that is an absolute wild card. What could or could not occur in the Middle East, another absolute wild card. And then demand is kind of unknown, coupled with inflation, which is a little bit, or recession, sorry, which is a little bit of an unknown. So we've got to kind of take all these things into the mix, but based on inventories, based on demand growth, based on uncertainty in Europe, again, all these things kind of indicate to us that we're going to see higher oil prices, not lower.
Yeah, care to make any guesses? I mean, not predictions, but guesses where oil could be heading? I mean, are we talking $100 a barrel? We saw diesel higher than regular gasoline. We've seen nat gas coming down right now. there's been a lot of things that have been happening, and we still have a relatively strong dollar at 103. Care to make any guesses or predictions for 2023, either
You
near
know,
term
hard
or
to
longer
pin down
term?
because you have these competing issues of a recession and demand growth. So a recession means you're going to have demand destruction. Economy's coming back, which puts demand growth on the upward swing, which would be great, but that's going to put pressure on inventories and the price of global oil. So certainly, I think it's going to go higher than we're seeing it today. Hard to predict if it gets to 100, and there's a lot of global uncertainties, geopolitical uncertainties that could impact the price of oil and put it on a
This is an interesting move here.
pretty significant upward trajectory. So hard to pin me down right now, but I do think above 80, above 85 is not outside of the question.
Okay, and so that's $10 from where we are now. We've had our 4th up session in a row on our close today. I just saw that. The other thing I was thinking about is, going green. And that was such a big theme that we were talking about here on Wall Street. Everything, was going green, and then COVID hit, and then, our economy sort of was sent reeling. And now there's been more criticism about how going green is more expensive. Where do we stand on the green? The big picture? I know the administration's been focused on it. We had Powell today saying, "Listen, I'm not interested in climate change.
Dreamy's not really
I'm
caring.
focusing on the economy."
I think the whole notion of going green is a reality. I think the market has spoken, consumers have spoken, and the government, certainly this administration, is pushing it as fast and as hard as they can. So energy diversity is not necessarily a bad thing. Adding more solar and more wind to our electricity and power mix is not a bad thing. We have to have a more realistic conversation about nuclear as part of that overall mix. But going green cannot and should not mean we are going away from oil and natural gas. Oil and natural gas are the lifeblood of this economy, the global economy. They are affordable, they are reliable, and they are the energy resources that we're going to need to drive our economy and the global economy for decades upon decades. So as we add more wind and solar, we have to keep our eye on the ball and provide more oil and natural gas, continue to develop oil and natural gas, do it in a cleaner, greener, more environmentally sustainable way, which the U.S. Oil and gas industry is already showing that they can do that. So I think that's got to be the conversation. These groups that are out there saying the only way to meet our environmental standards would be to ban oil and natural gas, they're just absolutely wrong, and there's no reality in which that could ever occur. So those conversations need to just end, and those folks need to be kind of pushed aside. We can diversify our energy portfolio, we can add more green energy, but we need to make sure that oil and gas become continue to be a dominant part of our energy mix. And we also have to recognize that electric vehicles and wind and solar rely on precious metals, critical minerals, which involve more mining. And when you have cobalt in the Congo, which is produced by child labor, and you have other things, even some of these so-called greener technologies aren't necessarily environmentally friendly either.
Yeah, understood. So it's got to be done all together, not one or the other, and not so hastily and all that. Got it. It's nice to see you, David Holt. Thank you, Consumer Energy Alliance. Thank you, David.
VWAP, I just trade it as a potential reversal for a resistance or a support.
Can that continue? Our panel is ready to weigh in.
So if I'm short a play and I don't necessarily have another position where I would close VWAP, I could pick VWAP to take profits, unless if I'm waiting for some sort of reversal candles or momentum or something. But yeah, it's a good place to take profits, or could even open positions there. But yeah, I guess I might take profits more at VWAP, since that's kind of the magnet. Got 10 minutes to power hour. I'm going to be able to do a video today, so I won't be able to stream to the very end. guys on Discord talking about Bior 115%. 26 million volume. Oh, reverse split. Yeah, the ultimate catalyst. Jimmy split the wrong way. Now this looks like it might be consolidating up here. Bouncing off this support I had before, resistance. But I think it's too soon to tell. We got MACD crossed bearish, which I like. For the downside, right under this 9 moving average. Wow. It'd be a resistance on Jimmy, I'd say. First one.
In fact, one of the worst in the past 100 years. But consumer staples tend to do well in those more difficult markets. But going ahead from here, we're actually looking to be more broadly diversified and seeing places that may come out a lot stronger than consumer staples. If you're asking me to pick a couple names in consumer staples, Pepsi and Walmart, just like everyone else, but they've honestly gotten pretty rich from here, and going forward, you may find them lagging in an eventual recovery.
Right, understood. Max, tell me, I know you liked Pepsi, Coca-Cola. I mean, for example, when we were talking about Pepsi and I saw their numbers and how well they did in snacks, and people just, the demand was there, and these companies in many cases were able to raise prices as well. But you think that these stocks are at this point fairly valued? Are they becoming frothy?
That's good to see you again. Yeah, they're trading roughly around 23 to 24 times earnings, which is about a 10% premium to their 5-year historical average. So we still like the companies,
That guy's got like the
but
perfect
I think
Santa
the
beard.
valuations are near fair value, and toward the end, the high end of it. They'll benefit from a declining oil prices. They'll benefit from declining commodity costs. Pepsi has the Frito-Lay division, which allows them to raise prices and to capture it. So we like them. We just don't think they're going to have the stellar year they had last year. But in times of a slowing economy, people like the consistency in earnings. They like to know dependability.
Be a good entry for puts
and
maybe
that's
on
why they're
Jimmy.
valued as they are. I mean,
Maybe
they've
too
been an
early though.
incredible investment for the past year and a half. We just don't think they're going to lead to the same extent that they did the last 12 to 18 months.
Right, and you know, I think that the fact that they have run up, as you noted, moving up as far as valuation is concerned, but they did have pricing power, did continue to see demand, and not really luxury items. They were more things people needed. You were talking, Alexis, you said the last time you were on, you were favoring consumer cyclicals over staples. Where do you stand now, and could you give us some examples?
I think everything you both have said is completely spot on there.
I like her
actually,
wingtips.
since the last time we came on,
Like a
the
50s Cadillac.
discretionary on an equal weighted basis has outperformed the consumer staples, although consumer staples have done better than the broader market. I continue to believe, though, that going forward from here, you're going to want to be more, if you're going to be in consumers, be more on the discretionary side than the staples side. Overall, we're just seeing that being more broadly diversified and giving yourself that flexibility so that as we come out of the year that 2022 was and look ahead and get some of these questions answered and start to see the market broadly improve. Being less defensive is really going to be better when you're looking to participate in this up move after just having this down. And so we're actually even looking at some other opportunities, such as diversifying into foreign as well.
Yeah, and when we think about this group, I mean, we think about it basically as a defensive group for the most part, Max. You know, a lot of the cereal companies, beverages, right, sodas and things. Tell me about some of the names that you like to keep an eye on that you might buy into at some point.
Well, I think the areas, you know, when you look at this part of the market, you can also throw in McDonald's, you can also throw in the Starbucks. They tend to be more of a consumer discretionary staple type. They're a household name. People buy them regardless of what the economy's doing. So we still like those, but again, they're not cheap. If you're looking for areas in the market for upside, I think you got to look for areas that got hit last year. As dividend investors, we like companies that are paying us 3 to 4% dividend yield that have been hit. So we think we might get a little more outperformance going into the new year with those because they've been hit so hard. So I think if we're looking for real value, we should be looking for companies that have strong dividends and have been washed out a little bit. To throw a couple of names out you know, we like Walgreens, roughly right now 10 times earnings, giving you 4%. It's a turnaround story, and it's a quasi-staple turnaround discretionary, but we really like what they could do in the market. If you also look at another one, if you look at auto parts, we like an AAP, Advanced Auto Parts. They've been hit, trading roughly 12, 13 times earnings, paying you 4%. That's where we're looking for the outperformance going to take place, is in those type of names that haven't had the upside potential they did last year, but this year they stand in line to really outperform, we think.
Yeah, because
like GME's just blowing off a little steam or something.
Soda, maybe even beer, but taking it out a little wider, names like McDonald's, you know, some fast food or casual dining and auto parts, and these are some of the things that you need. Alexis, do you think there's some potential in some of these other things? You even mentioned maybe going abroad with your money and putting it to work there. Where's the potential and opportunity for 2023, Alexis?
I think there's honestly a lot of opportunity. There's going to be a lot of volatility, but if you look at being diversified, you mentioned foreign, which I did mention. We are starting to look there. We're not betting against U.S. markets by any means, but traditionally, every 3 to 5 years, you start to see foreign do well, and we haven't seen that for over a decade now. So it is overdue, and we're starting to finally see things look promising in that area. We're doing that pretty broadly with IFA, and then maybe looking into Europe. And again, just taking that more broadly diversified approach, taking that step back, letting you not be scared onto the sidelines, and also letting you kind of adapt to market changes as you're seeing leadership change while the year progresses.
Yeah. And just quickly, Max, you talked about having sizable investments in names like Coke and Pepsi and that being fairly valued at this point. And kudos to you. You were in the right place. I mean, you sort of held up in a really tough market. Where do you see having sizable investments going forward?
I mean, I think the ones I've mentioned, Advanced Auto Parts is one. We still like UPS, for
New
example,
highs, still
giving you over
going up
3%, 3.3% dividend yield. We think that has there. Walgreens, we like it. We still like AbbVie. We think that's going to have another tremendous year towards the second half.
3 minutes.
We like them. If you look at the industrial side, we like there's potential there. We also like technology in the second half. Right now, we still like Broadcom, even though it's down today.
Natural
so
gas
there's
is
areas in the
almost
market
back to its lows again.
we have sizable investments in.
Max Wasserman, Miramar
closed.
Capital, Alexis Brown, Alexis Investment Partners, thank you both very much. Good to see you both. Thanks. That's going to do it for us here on the Watch List. Thanks for being with me every single weekday, 11 a.m. and 2 p.m. Eastern Time here on the TD Ameritrade Network. I'm Nicole.
Two minutes. This is a nice looking chart on BBY. I think we get at least one more day the upside, filling this gap. All right, 30 seconds. Watch Jimmy snap. Nothing. Hasn't quite hit that resistance. 17.13. 1 penny away. Like it's coming down. Jamie's going up. Still, just broke that resistance. 1 penny. Still very low volume, but it did pick up here since it started moving. Like an hour or half an hour ago. There, SPY broke through that level. Jimmy closes this, yeah, close the day with engulfing. That would be pretty good. Oh yeah, look at that. And his closing is bullish on both. Hardy's moving back up. LOXD with a nice consolidation midday. Mara's still at the highs? Wow. They didn't chill out at all. Jimmy just frozen up here. Yep. Step away talking about red diamonds and stuff. Yeah, pretty good move on it. SPY. Really want to hold that support? probably hold my short on ES. So I closed my natural gas, so I should have enough margin to be able to hold it if it does go against me for a bit. Put more candles on GME. Just trading like a penny stock though. Still pretty low volume. Alright, SPY back to VWAP. And there's our GME with the SPY. BBBY with the CEO doing a town hall on Wednesday? What? I get a spicy filing from the company in today's after hours? What's this tweet all about, War Chest? Yeah, I'm gonna hold out. I think at the very worst, I will, not the very worst, but if I can't close it out tomorrow for profit, or even after hours or the pre-market, then CPLI should see some big swings, usually both directions. So we'll just see. This was kind of my intention with futures anyways, that just my time frame just kept getting shorter and shorter. Yeah, I wanted to be holding overnight and catching longer range moves. That being said, daily this looks kind of bullish still, but I'll have to wait and see. This engulfing candle. Volume is still really bad today though overall. Really bad. State breaking out. Already almost back to 100%. Okay. 3:12. Got about 45 minutes to close. Probably gonna hold my short here. If I can get out of it today, I might just do a stop loss on it, but I don't think I'll be able to. I don't think the market's gonna come test these lows yet again today. Maybe tomorrow. Let's wait on CPI. I'm gonna cut off the stream, do my video. Thank you guys for thumbsing up. Appreciate it, and thanks for watching and subscribing. And yeah, I'll have a video up in about an hour, and my recap on there. Thanks, Ace. You should step away more often. It seems to help pretty well. All right, see you guys in the video. See you on Discord. Thank you. Peace out.